Right, Rick, I am not going to be taking too much of your time today because you're going to be a busy man over the next couple of weeks. Really, you have a conference to prepare for by the end of next week, I suppose, which is also where I'll hopefully be seeing you if your government is kind enough to let me in. And for people watching, by the way, I will have a link to Rick's upcoming conference where pretty much all the people who are someone in our space will be there. So that'd be Lobo Tigre to Danielle DiMartino Booth to Adrian Day, Jim Rickards to Nomi Prince, Joe Mazumdar, Grant Williams, Matt Geiger, Robert Friedland. I can keep going, so on and so forth. And there's going to be almost, what is it going to be, Rick? 50 companies that you've vetted yourself? Like how many companies are coming?
I believe we have 52 companies.
Okay, well,
And as you say, these are companies that the conference sponsors own in their own accounts,
hmm,
meaning that they literally have been vetted. At most conferences, the qualification to be an exhibitor is a check that cashes.
hmm.
At our conference, every single issuer has been vetted. That sadly, as you know, Antonio, doesn't guarantee that the share price goes up, but it does guarantee that the process is honest.
Hmm. For people listening, if you don't feel like going to Florida, which I wouldn't know why you wouldn't feel like going to Florida, but if you don't, if you cannot be there in person, you can watch it from the comfort of your own home. There's a 100% money back guarantee. Again, I'll leave the link below for you to check it out. But Rick, I'm rushing to ask you what everyone seems to have been thinking these last couple of weeks. But you mentioned a $2 million company somewhere in an interview. I wish I remember who the interview was with to give them a shout out. But shout out to whoever the interview was with. You said you were buying it yourself, but you never gave us a name. Can you give me the name?
Of course not. This is a $2 million market cap company. It trades by appointment, and I'm trying to get sufficient appointments that I get a reasonably full position. The last thing I want to do is compete with 30,000 of your viewers. I really mentioned this stock more in an educational sense. The stock, the discussion had to do with the fact that I think for hardworking speculators, we're at a sweet spot. Commodity prices have moved, but equity prices haven't moved, particularly the extraordinarily small companies. Most speculators are well advised not to buy the extraordinarily small companies because they're extraordinarily risky. But if you do the work and buy them at the right price, that's where the 10 baggers are. That's where the 20 baggers are. That's where the 30 baggers are. And so I mentioned this more for educational purposes than for anything else. It meets a few criterion. I need to say the probability is that it won't ultimately be successful.
Hmm.
That doesn't mean that the stock won't go up in anticipation of success, but the criterion which I have, which is to say elephant country, people who have been successful at the task at hand, and extraordinarily low valuations, market capitalization relative to cash, uh, make opportunities like this appealing to me.
Hmm. Well, but then liquidity is an actual issue. Even with me, I don't have a lot of money at all. But like when I want to start a $2,000 position, so it's hard, right?
Yep.
So how would you deal with that? Like, do you call up management and ask for a block trade across or something? Like, how do you deal with that?
I do everything I can possibly do. I tell them that if they're successful, which is to say that if they give me an excuse to talk about the company, I'll do it. If they can get me a position, I try to find out who other shareholders are, call them up to cajole them to give me a position.
Hmm.
But the most important way is to be in the market on bad days. If the mining stock market or the precious metals market or equity markets generally are having a very, very, very bad day, very often a person who has a position but doesn't have confidence will sell that position. If it's an extraordinarily bad day, if you have a Vancouver punter or a Toronto punter on margin, they don't make the sell decision. The margin clerk makes it for them, clears their portfolio out, uh, sells whatever stock they can that has a bid. And if I have a posted bid, I get filled uh, in hopes of paying down the margin loan. So I sort of live for extraordinarily bad days, which is where I round out my speculative positions.
Hmm. It's interesting when you should mention that you do everything that you could do. Does that include using level two data? Can you really do it without level two data?
Yeah, because the market level two really reflects where the market makers are. They don't reflect iceberg indicated bids or offers. And what you find is that in the sub $10 million market cap space, most of the action takes place in the iceberg market. If you are looking for size, in other words, there are prearranged off-market transactions that then get reflected on market. The other thing is that stock that isn't currently on offer can come on offer on a day that challenges the patience or the faith of the shareholders. And that's what I mean, that's really how I get my positions. I get my positions during panics.
That's also when I suppose more than one person sells, because there was a quote about this, right? It's the stock you own is sure enough to go down on the day you decide to buy it, and vice versa. Because if you're an average man doing this, then there's probably a bunch of other people doing it as well. Not that I'm alluding you're an average man in any way. I wouldn't dare do that. But are they going to be in Florida next week?
No, company will
Okay,
not be in Florida.
good.
I mean, with a $2 million market cap, uh, coming to our conference in Florida would be akin to using an elephant gun on a mouse. I actually wouldn't let them come to Florida, a circumstance where a whole bunch of money was competing over a small name would spike the stock, and that wouldn't serve anybody except for disloyal holders.
Mm.
So that isn't the kind of company that we would ever allow on the floor in Florida.
Typically, companies that get to that valuation, in my brief experience, are either very early on in their exploration journey, or something has been wrong with the company before where the valuation had to fall to that level. I don't suppose you're going to tell me which one it is, because I might quickly derive what the name is. But
You forgot a third alternative, which is to say that sometimes people who are very, very good company builders, who have great technical expertise, are bad storytellers. They think in empirical terms. If you ask them a question, they give you an 8-minute answer. In this circumstance, the managers are superb technically. And I would describe them as, let's just say, not very good storytellers.
hmm.
Very recently, I don't know if you know Mark Turner, aka Inca Cola, a strange guy in the best of times, pointed out in his blog that the worst companies seem to have the best promotions and the best companies seem to have the worst promotions. I'm not sure that's true. Ultimately, I've done business with the Lundin family for 3 generations, great company builders, great storytellers. I do business with Bob Quartermain, Robert Friedland, but it is often true in the sub $10 million market cap space that highly competent technical people aren't good storytellers and don't enjoy telling stories. They enjoy doing geology or whatever it is they do. So there is some correlation to the idea that the best technical people are the worst storytellers in the really, really, really small micro cap space, the sub $10 million space.
Hmm. What matters most to you then in that case? Is it, do you get attracted to the asset first when it's that cheap, and then you start thinking about team and all the rest?
Other way around.
Hmm.
In the micro caps, it's all about the team. Remember in an earlier interview, Antonio, I said that I had learned when I was your age that the average mineralized anomaly has a 1 in 3,000 chance of becoming a mine. So I don't get all that attracted to micro cap assets. I get really attracted to micro cap people. There is the odd occasion where you get some data around the third dimension, which is a fancy way of saying a drill hole. And that drill hole validates the exploration thesis that the company has put forward. At that point in time, you can be excited about an asset. But a $2 million microcap company seldom has a good drill hole on a big thesis. Otherwise, it wouldn't be a $2 million market cap. If you're playing in this space, you are playing it because you know that uh, they have the ability, based on prior efforts, to generate projects in elephant country where, if they are successful and they can conclusively demonstrate a good thesis, that a $2 million market cap can be a $20 million market cap even before the first drill hole.
Hmm.
In other words, you are buying something because you're hoping for a 10 bagger or a 20 bagger, understanding that there's only a possibility rather than a probability of a favorable outcome.
I love that quote of yours because it's true most of the times. But the same that is true for the geology, isn't that true for the people as well? I mean, if this $2 million company, if Ross Beatty was announced tomorrow to be headlining the financing, it's going to go to 20 immediately.
It'd be all over. Yeah, yeah, absolutely.
So where's
If
that
you
sweet spot of people that are good enough but not famous enough to push the stock that high, but they're good enough to
time,
eventually?
time, that's the sweet spot. Time.
Hmm.
Most speculators don't have enough confidence in what they're doing to have the patience or the tenacity to hang on to a stock like that. And the fulcrum is precisely where a young person like yourself doesn't want it to be. You want to buy the stock and have Ross Beatty announced next week.
Yeah.
And that almost never on offer.
Hmm.
If, as an example, to use Ross Beatty's name, he called me up and asked me about XYZ company, and I came to understand that he was doing background due diligence with a view to becoming involved, it's highly likely I'd buy some stock. It wouldn't be a $2 million company anymore. So the probability that people can anticipate those events is very, very, very low. You have to, if you are a seasoned risk-taking speculator, you have to buy high-quality people inexpensively when nobody else cares. I don't know if you follow the work that John Kaiser does, the bottom fishing report. But John Kaiser has made an extraordinarily successful 35-year speculative career buying vehicles controlled by high-quality people when they're working on something else, being willing to accumulate patiently for a year and a half or 2 years if need be. All of a sudden, the stock catches fire when they shift their attention to that stock. And John's done a remarkable job as a speculator for 3 decades, simply by doing very hard work and by being patient.
Bottom fishing was my dating strategy before the universe sent me my wife, so I know all about it. Um,
I'll remember that quote in Florida. You better be nice to me.
I will. Um, so when it comes down to the really small names, though, what about position sizing? Because you cannot. I mean, these are risky things in the best of days. So how do you deal with position sizing?
Before we deal with position sizing, let's deal with whether you should do it at all. It requires a lot of work. And it actually isn't appropriate, in a sense, for somebody with a portfolio the size of mine for the reasons that you mentioned, which is to say the amount of work I do in names like that is entirely disproportionate to the amount of money I make. I just enjoy it. I'm better off making large, concentrated bets around somebody like Robert Friedland, where the percentage gain I'm going to enjoy is less, but the probability is high. And the ability to allocate a lot of capital relative to the work that I have to expend is there. I do these little ones more because it's fun, which is to say, I enjoy finding a $2 million company that could become a $200 million company. And I also enjoy by now the ability to lend some occasionally needed support, to those sort of toiling technical guys that don't have the ability to tell a story. It is unlikely that I will ever tell a story. But if they give me the excuse, which is to say, if they generate a project in an area that they are very familiar with, that's generated a lot of giant projects, including a couple by them, I might be able to be helpful to them.
The 2 to 200 million thing is kind of what caught my attention there. Is that the only moment that you'd get involved when you see that kind of potential in these small stocks? Like you wouldn't get involved for a re rate to 15 million.
Probably not. these little guys to justify the work I have to put in them, never mind the low possibility of quantum success, means that the success really has to be pretty, the size of the prize in the unlikely event of success has to be enormous. But mercifully, when I was much, much, much younger, like in the decade of the 70s and the 80s for that matter, those gains were material to me. And the money that I sensibly invest today, as my wife says, came from speculating nonsensically in my youth. So I did this highly successfully when the economic results were more germane relative to the rest of my net worth. I do it today much more for amusement.
But you still don't. I mean, this is how you made the money, but you don't think that's the way for most people to make their money.
Most people have lives, Antonio. Uh, for most people, sadly, I think they want to live rich as opposed to be rich. I wanted to be rich. And so I worked very hard. I focused very hard. I took very considered risks. I never wanted to own a Lamborghini, although I had some interest in owning a Lamborghini dealership. For most people, they don't have adequate either financial or psychological reserves to do this, and they don't want to work too hard. They want to have a life. They may have a job. This is my job. Speculation, securities analysis, credit analysis. This is what I do. Where other people enjoy watching the NBA finals, I could care less. I like to do risk-adjusted net present value analysis on exploration companies. I enjoy doing it. I spent the last 2 days out in the field in Nevada and then Idaho looking at gold projects. Nevada in late June, in terms of the weather, doesn't have much to recommend it. So while other people might have been watching Game 7 of the NBA Finals, I was walking up and down side hills. I enjoy doing it. So that means I'm uniquely suited to circumstances like this microcap company relative to other people who have lives.
What kind of car has that strategy bought you, though?
I prefer Toyotas. I don't get
Good.
any particular status from a car. What I really ask is that it run and get me from point A to point B. I think my new car now is 12 years old.
Sir, I'm originally from Eastern Europe, so communism makes us believe that Toyota is a luxury vehicle. Here's an example there. Who did you visit in what did you say, Nevada and Idaho?
The name of the company was Integra.
Okay.
They have two projects in Nevada that, ironically, I helped Vista Gold buy years and years and years ago. Were sold on by Vista, and then they have a project called Delamar, a former producer, Kinross producer, in extreme southwestern Idaho. That would be, if it's successful, a restart.
Also a team that's done it before. They're doing a bunch of stuff. I believe at the same time now, as well. But interesting to look at. You're bringing up some of the bigger names. That this might be a good point to sort of switch over the conversation, if you will, to something more topical and unfortunately more sober, more serious. But there was a heap leach pad failure at a gold mine
Yep.
in the Yukon this week, and the mine is operated by Victoria Gold. What are your initial thoughts here?
Well, as far as I know, there were no fatalities, which is a very good thing. A massive earth failure like that uh, is extraordinarily dangerous. And all of us need to remember that the most valuable thing that comes out of a mine is a miner. And I'm delighted, although I'm not a shareholder of Victoria Gold, I'm delighted that what will be a fairly serious financial loss didn't turn into a human loss, which is a good thing. Pit failures are unfortunately going to be with us for as long as we have pits. There are things that one can do, as an example, dry stack tailings as opposed to wet stack tailings, that reduce the probability of pit failures, but they're expensive. were Victoria to have been technically completely error-proof, it would never have been built. So, we need to understand these things. You can do a fair bit of work in due diligence around engineering, and it's important to note that the most important financier of Victoria Gold was Orion, who do high quality technical due diligence. So I don't think that this was a particularly predictable failure. I think it comes under the heading, mining is a risky business.
Yeah. Have you been invested in a company before that went through something similar, mine failure of any sorts? And yeah,
Much worse. I was and am invested in BHP and in a joint venture with Vale. They experienced a much more catastrophic tailings dam failure that, if my memory serves me well, resulted in the death of 60 people and will ultimately result in fines to Vale and BHP, the two operators, that probably approach $20 billion.
wow. How do you deal with something like that as an investor? Like, do you sell after, like,
Cost,
Victoria Gold is down almost 90%?
yep, cost of doing business. You, if you're going to construct a risky portfolio, a speculative portfolio, you have to have enough names that you can afford to lose 70 or 80% on any individual constituent in that portfolio. You have to do that. The probability that Victoria would experience a pit failure was small, but if you play close to the edge, which you do in single asset producers, you play close to the edge by nature of the game, you run those risks. That's why multi-asset producers sell at a premium to single asset producers. With a multi-asset producer, as opposed to being down 90, you'd be down 45. Not fun, but statistically twice as good.
Given that it's a one asset producer, Victoria, would you sell if this happened to you?
I haven't studied it because I don't own it. My inclination is that you couldn't come close to replacing the mine for 10% of the prior market cap. So I'd probably be more inclined to buy than to sell at present if I did the work. If my memory serves me well, that mine cost well over five. Well, if you include the exploration, the low probability of initial success with the exploration, they probably have $700 or $800 million in the project. If you assume that reconstruction will take 2 or 3 years to permit and do, and let's say it's going to cost $100 million, juxtaposing the $100 million and the fact that the rest of the mine is intact and has been discovered, relative to the initial capex, which is probably including drilling in excess of $700 million, makes it seem cheap. I
This was
haven't
a
studied it, but what you need to do in all these circumstances is have your brain overwhelm your heart. It means that empirical processes have to take over and push out emotional processes.
How do you do that though? Because for me, where the emotion comes in is that when I see something like that drop 90%, I'm like, oh, this was 650 million last week.
Yep.
Now it's 75. It's on discount. I have to buy it. That's almost immediately where my brain goes, but that's not necessarily a good decision.
Well, I think it becomes empirical. I think you probably get on the phone with management and say, roughly, what do you think it would cost to rebuild this pit? How long will it take to permit the rebuilding of the pit? Then you go back. I mean, this takes 10 or 12 hours. So if you're not willing to spend 10 or 12 hours on it, you don't do it. If you are willing to spend 10 or 12 hours, when you get a rough sense of when you restart the mine and how much capital it'll cost to restart the mine, then you look at the cash flow model from, say, the last 8 operating quarters and the feasibility study, and you try to figure out what the net present value of, in today's terms, of that cash flow would be, whatever your start date is. So if you assume that the net present value of a restart 3 years out that cost $100 million is 350 or $400 million, you probably do it.
Do
You know,
you
you add the market cap plus the capex, the restart capex, and you discount, pick a discount rate against your expected start date, and that gives you pro forma value. If the price of that market cap is a quarter of projected net present value at today's gold prices, particularly if you believe in higher gold prices, that sort of makes up your mind if you have the guts to hold it.
do you think that strategy is worth employing as part of your overall investment strategy? Whereas you said it's best to operate on rationale and not emotion, but most of the times the market actually operates on emotions. And so whenever there's a big spike, it's emotionally driven. When there's a big drop, it's potentially also emotionally driven. So is it worth it long term?
90% of the money I've made is on the juxtaposition between price and value. Buffett famously says that in the near term, the market is a voting machine. I have been looking at the way people vote for 50 years, and I'm not particularly impressed. He says that longer term, that the market is a weighing machine. So if there's a big juxtaposition between the way somebody votes and what something weighs, there's an opportunity there. Employing that strategy involves willingness to do work. Investors and speculators who aren't willing to do work, should become postmen or something. They should do something else.
Do you think this influences the Yukon as a whole? I mean, I don't see any of the other names. I was trying to look at them from Fireweed, Snowline, Banyan, Sitka, Rackla, Hecla. They're not down too much. Some of them are up, actually. Do you think this makes the jurisdiction any less attractive?
No, not at all. Not at all.
Well, in terms of permitting or something, would this incident change anything?
Yukon has no second choice. The muskrat business is in terminal decline.
True.
There's 40,000 people up there. There's a substantial problem with indigenous unemployment. The government of the Yukon understands that with mining, people who want to live in the Yukon can. So I suspect they may implement some new construction standards around pits and around if it was a function partly of moisture balance in the pit, they may ask people to address that with more strenuous engineering standards. I don't know if it is or not, frankly. I didn't own the stock. As you point out, I've been time constrained with my own conference and building a bank. So my willingness to study this for my own amusement has been low, and I don't know the cause or the probable cause of the pad failure. If the pad failure is deemed to have been reasonably preventable, then there may be some incorporations of new standards. I mean, certainly the Mount Poly pad failure 10 years ago called into account tailings facilities that experienced excessive water, and the fact that the tailings can, in the wrong circumstances, if the pads aren't constructed correctly or the dams aren't constructed correctly, be subjected to catastrophic failure. And I think that's changed for the better the permitting regimen in British Columbia.
Yeah, these things are hard to, the longer term effect of these things are hard to predict. I mean, I think Robert Friedland might still get questions about his own adventure with that in the US, which was 40 years ago, something like that.
Correct. Now, this wasn't a pad failure or a dam failure. This was failure to work to mitigate water egress. In fairness, too, the courts found that a lot of the acid pollution on the Arapahoe River wasn't due to Robert's activities at all. They had no arsenic and acid baseline for the river before Robert's operation, and there were hundreds of old mines up there, and the terrain is arsenic and acid generating anyway. Robert probably should, or let me rephrase that. The company and the state probably should have insisted, as they do now, on pre-bonding before that project was built, so that water mitigation would take place in the bankruptcy of the issuer. I've been an advocate personally for 40 years of more extensive pre-build bonding, both in the mining and the oil and gas business. People look at me and say, Rick, not so coincidentally, you're in the environmental bonding business. So you're talking your own book. That's true. I'm in the environmental bonding business because I saw a way to make some money solving a social problem. And I do believe that the mining industry and the oil and gas industry have not done a good enough job pre-bonding to make sure that, to the extent that they go into economic difficulty, that the cost associated with environmental failure isn't borne by society.
That's a deep thought, actually. It probably warrants a conversation in and of itself there. Another conversation might be something funny I wrote down. The size of the Yukon is almost as big as France. But there's about 68 million people living in France, so the Yukon might want to reconsider their immigration policy there for a second. But you're right. Is there really an alternative here? I don't see it. And how long is it going to take for this to be solved? I'm also thinking about all the funds who used to own the company, and how are they going to react to it, because maybe they don't want to sell at this price, but eventually maybe they get pushed out of it, and so there might be a better buying opportunity down the road. Stuff like that is what's running through my head.
Remember that you're reverting back to emotion.
Sure.
What this is really about is, what is it worth? What is it selling for? And what is the probability of your estimate as to what it's worth? How accurate is it? There are, unfortunately, a lot of funds that are highly emotional. They make decisions much, much, much too quickly and do far too little work. It's also worthy to note that I don't know if Orion has any shareholdings left, but if they do, they probably have them in an institutional partnership that sunsets. Which means that although they may or may not want to be long-term holders, they might not be able to. It might be, and this would happen irrespective of a facilities failure, that simply as a consequence of the structure of the holding, that it would be liquidated anyway. It's highly unlikely that if the equities have been passed through to the institutional holders that were limited partners in the Orion Fund, that those partners would have the technical wherewithal to do the value calculations.
I appreciate you pulling me back to reason and staying away from emotion. And I asked you, how do you do that? And I suppose, or at least I hope, experience is going to help me solve that.
Antonio, I'm an old man. You know, you take a mistake that's possible to make. I've likely made it. I don't feel any particular necessity to make the same mistake 4 times.
I hope experience is going to compensate for the lack of brain cells here on my end, because that's the only thing I can hope for. Let's move on to something that's also topical here, completely jumping maybe away a little bit from gold and silver, but uranium. Paladin's offer for fission uranium. So keen to get your thoughts on the deal specifically, but also mainly interested in whether you see any of this influencing the M&A space for uranium first, but also Canada as a whole.
M&A is picking up. I hope a couple things. First of all, I hope, maybe against hope, that NextGen bids for fission. Those deposits should be won. NextGen is already facing a lot of heat for the last financing they did. And it might be that NextGen feels that they can't go bid $1 billion worth of stock for Paladin, for Fission. But those deposits belong together. Those deposits should be built together. It may be that Paladin and NextGen can arrive at some sort of compromise where they share facilities. That remains to be seen. The second comment is, I hope the Canadian regulators approve a foreign takeover of a Canadian uranium asset. I think that Australia may be more palatable than the Chinese. We'll see. And this may reflect the fact that the largest owner of Fission, China General Nuclear, understood that they wouldn't be able to take over Fission. They may or may not have been readily welcomed onto the register of NextGen. I can't tell you that. What I can tell you is that this M&A needs to take place in the uranium business. Larger entities, if they're correctly constructed, have lower general and administrative expense relative to assets under management because they have more assets. They have lower G&A relative to projected cash flow because carefully constructed, they have lower G&A. But larger companies also tend to have larger trading volumes, attract larger institutions, and hence have higher share prices. So my belief is that this is a circumstance where, hypothetically, 1 + 1 could equal 2.7. Would I have liked a higher premium? Sure, I owned more Fission than I did Paladin, although I own both. So would I have liked a higher premium? Yes. If Paladin sells off after they have issued the stock to Fission shareholders, and Fission shareholders who owned Fission, anticipating a takeover, sell the stock because their reason to own the stock is gone. In other words, because the event that they bought in anticipation of has occurred, I will be a buyer. People look at Paladin and they say, how will they be able to afford to build 2 mines? And what I think they don't understand is that they'll build them sequentially, first of all. But secondly, the changing structure of the uranium market, where transactions increasingly occur in the term market, means that uranium mines will be uniquely financeable relative to other kinds of mines. Because in the term market, Paladin and other mine developers can lock in minimum pricing and minimum volumes for their product for as long as 20 years. You can't do that in any other commodity. And a term purchase contract with a investment quality counterparty, say Ontario Power or the Southern Company or Duke Companies, is literally a document that you could take to the bank. So some of the financing difficulties that some people in the market have expressed with regards to Paladin biting off more than they can chew reflect the fact that some of those people who are critical don't understand the emerging dynamics in the uranium market and the implications for project finance.
I also like the fact that this kind of beefs up Fission, if you will. Like, for the longest time, the assumption was that, oh, NextGen has to take them over, and they're pretty much the only bidder there. Cameco is not going to start getting involved on the western side of the basin, given the land they have on the eastern side, and so on and so forth. Yep. But this is a new player that I don't think anybody really foresaw this coming, and so this kind of beefs up. Yeah.
I sure didn't. I mean, I'm frankly delighted to see it because I want to see more M&A. I haven't seen information as to how the Fission insiders were treated, and I need to look at that to see if they benefited disproportionately to other shareholders. I mean, a change of control fee is warranted. You know, if you're working with a view to building something 6 or 7 years out, and a bunch of your compensation takes into account long-term compensation, and there's a change of control, you deserve to be paid. You probably don't deserve to be paid 5 times salary and bonus, particularly if you keep your options, if your options roll over into the acquiring company, but you probably do deserve 2 years. There are situations that I've seen on the Toronto Stock Exchange venture where management's change of control fees are substantially larger than their shareholdings, their salary, and their bonus. which is to say these guys actually have an incentive to see the share price go down so
Sure.
that they can affect a transaction and grab the change of control fee. And I
Mm.
haven't done the work for Fission to see how McElroy and the rest of the team, who I've known, by the way, for a long time, benefit relative to how I benefit.
Yeah, I think I looked at the SEDI filings. Ross owns 4.5 million shares, I think, something along those
Yep.
lines. I'm not sure
Yep.
exactly, but something along those lines. And I'll have him on an interview. Definitely.
Yeah,
Fission is so
ask him what his change of control fees are,
for sure.
whether or not he is due any other fees, and what, if any, ongoing role he'll have in the company. Be worth asking. I'll
Mm.
ask him the same thing at the conference in 10 days.
This if the deal goes through, as far as I understand, it's not a done thing yet. Like it's got to be voted, and
How to be
this seem
voted.
the online world seems to kind of be split on what they're going to vote yes or no. As far as I'm getting it, you're going to vote yes. But that's also going to get Paladin listed on the TSX, as far as I understand, because
Right.
they're on the ASX right
Yep.
now. Do you think that's
Yep.
going to add any extra liquidity or help the stock price go up?
It depends on how hard they work in North America. Uh, the Australian stock exchange is red hot right now. What Aussies usually miss is high-end U.S. retail participation. The U.S. retail market is the deepest investment market in the world, and it's underserved for natural resources relative to Australia and Canada. So, to the extent that Paladin maintains a Toronto listing and pays attention to their OTC listing simultaneously, by pays attention, I mean comes to the United States and comes to Canada to speak to institutional and retail investors, the TSX listing is a very good thing. There was a rash of Australian listings in the decade 2000 to 2010, and the Australians seemed to believe that simply being North American listed would convey more liquidity on them without talking to North American investors. That was stupid.
Mm,
That didn't work.
right. Good. Rick, I'm going to let you go because I know you have to start getting ready for all these things. What am I forgetting to ask you here? What are you thinking about the most these days?
I think we're in a real sweet spot. I think in particular, the difference between the gold price and the gold equities price, which has many people perplexed, is easy to understand. The gold buyer has been central banks, and they don't buy stocks.
Hmm.
We haven't seen retail participation in the gold trade until 11 weeks ago. As that retail participation deepens, I think that you're going to see interest switch to the gold stocks. So I think that you're in a real sweet spot. The only thing that would, cause a hiatus in that would be a real ugly recession and an accompanying liquidity squeeze. Will there be one? I don't know. So for me, my life is all about the juxtaposition between value and price. And I see that juxtaposition being attractive here. I see it being attractive throughout the natural resources space, probably most attractive in energy, but attractive in gold too. And the gold stocks in my career have only been really reasonably priced, probably three times. In each case, that relative underpricing has presaged a really nice beta move in the gold stocks. And I anticipate over the next 2 or 3 years, we'll see precisely that move. I'd be stupid if I didn't take advantage of the time you've given me to remind your listeners to go to ruleinvestmentmedia.com, list their natural resource stocks, and have me rank them. There's absolutely no obligation and no charge. And finally, the best work I do happens once a year at the Natural Resources Investment Symposium. It's probably too late for your listeners to come to Boca Raton, but they need to remember that via live stream, they can watch the conference in the comfort and convenience of their own home, have advantage of the recordings for the balance of 2024. And if aren't satisfied for any reason, as you mentioned, there's a gold-plated money-back guarantee. So get your stocks ranked by me for free, and then do your intellect a favor and attend the conference. If by no other means than via live stream, there's no risk to that.
How much? What's the price of the live stream deal alone?
To be honest with you, I forget. Whatever it is, it's fully refundable if you don't think you got your money's worth. So, by definition, it's a good deal, or else you don't pay.
Hmm. And it's all on demand, like all the talks, like Robert Friedland, like
Uh,
everybody.
and the breakout sessions.
What's
Yeah,
that?
not just the headlines, the breakout sessions.
What are
All
breakout
recorded.
sessions?
Uh, One-on-one session, not one-on-one sessions, but particular workshops where a company or a speaker does sessions that aren't on the main stage, but are in one of the ante rooms.
Hmm.
That's all recorded too.
You should pay someone to strap on a GoPro and follow Robert Friedland live stream that on YouTube too for the conference. That might be interesting.
We will have a special reporter for the live stream who
Hmm.
curates the live stream, introduces speakers with what he thinks is important in terms of what they're going to say and what they have said. We didn't do that last year. The conference was geared to the live audience, not understanding that twice as many people attended via live stream than live. But we've addressed that failing this year.
Hmm. Yeah, but I want to see what companies Robert Friedland goes to talk to that weren't scheduled interviews. So,
I think I told you that 5 years ago, an attendee emailed me and said that the ability to follow Robert Friedland through the exhibit hall and occasionally listen to the questions that he asked was worth the price of the conference, that the whole rest of the conference for this attendee was free.
how many people are coming on this year?
I don't know. I think it'll be higher than last year.
Hmm.
Last year we had about 400 paid. We had 80 or 85 comped. Importantly, you probably have 2 employees per exhibitor, and those people end up being fairly high quality attendees in terms of their knowledge in their own right.
Hmm.
And then I think we had 1,300 people who viewed last year via live stream.
Hmm.
Those numbers are all higher this year.
How many people wanted their money back?
We have refunded about 0.1% of the tuitions that we've charged. We've had money back guarantees now for well over 20 years.
Hmm.
Uh, it puts the pressure on you, as it should, to deliver high value for your attendees. And interestingly, although we don't make people tell us why they ask the money for their money back, we always ask them to tell us so that we can improve the service.
Hmm.
The most frequent response is that the educational products are too high level, that they're above their head, which is to say that we give people too much information, more information than they're proposed to absorb. That isn't something I'm going to apologize for.
Hmm.
This is a fairly high level conference.
But sort of the 1,300 people that came to the virtual thing, what one person, because that's 1/10 of 1%, if my napkin math is correct. So one person wanted to, yeah, I can
I
imagine
think
being,
we had, I think we had, I think we had 3 requests for refunds in the live stream and nothing in the live.
hmm.
So when we do our percentages, what we're looking at is the percentage of total admission revenue relative to what we were funded.
Well, live, I don't imagine wanting your money back. It's also in Boca Raton. What did you tell me? It's a $1.5 billion resort, something along those lines.
I think Michael Dell now has a billion four in it.
Hmm.
For your viewers who aren't familiar with it, it's a resort in downtown Boca Raton with an 18-hole golf course, a half a mile of frontage on the Intercoastal Canal, and a half a mile of frontage on the Atlantic Ocean.
Hmm.
That's It's an astonishing place. I'm going to work you too hard to enjoy too much of the resort, except for early morning and in the afternoon and evenings. I will tell your attendees too that the evening boat cruise, which is optional, is almost a must. Uh, South Florida turns very nice at night, and cruising up and down the Intercoastal Canal with an open bar on me is a wonderful way to digest intelligently the proceedings with other attendees. Sharing a cocktail with Jim Rickards or Nomi Prinz or Daniela DiMartino Booth when they don't have to perform, when they're just being folks, is a lot
Hmm.
of fun.
Good. Yeah. Well, I hope you're gonna give me a good time, a work time. Yeah. Well, you said you're gonna work me hard, Brick. So yeah, I'm looking forward to seeing you. I will actually let you go now because I also have someone else waiting to talk to me here in the CEO barbecue portion of this episode. So I have 3 companies in total to go through, and we're going to do that here in a second. But first, there is a warning on your screen right now that I will need you to read. It's not just some disclaimer, it's an actual warning that will help you stop losing money or prevent you from losing money because investing is inherently risky, but this is the mining space. This is junior mining, so exploration development. So it's even riskier. And although I am here to make money, it's no secret that here at Resource Talks, we try to be different than other channels. And we do that by not hating you. So that's the reason why I'm telling you all of that. And what that means specifically is that although none of the companies that you're going to see or hear about today have paid for the production of their interviews, they are likely seeing their participation in this program as a chance to do some marketing. Okay, so look at this as marketing. Start by understanding that, and also be aware of the fact that this and other channels who interviewed CEOs or talk about public companies or whatever, we typically earn our money by charging for the creation and publication of these pieces of content. Even though most will not be as vocal about it and they might try and kind of hide away from it with a small disclaimer or whatever, that still is the case. And you should treat it as marketing. Okay, this channel does it too. That's how this channel earns money. It makes content for companies. And so, although I don't make any buy or sell recommendations because there's a clear conflict of interest, in my opinion, many do. Like many will take the company's money and then tell you to buy that stock. Uh, Obviously, not a huge fan of that, but it happens out there. So you should be careful with that. And anytime you're watching any type of company specific content, please approach it with a dose of skepticism. And if you're feeling like it, maybe even try using your brain while watching some of that as well. And also, although I try to do some research and ask questions that help you better understand the story. And I never send the questions up front. There are no questions off the table with me, and the companies get no say in like they don't get editing rights and anything like that. Whether they've paid or not, that doesn't matter. They don't get those rights. They don't get the questions. That no questions off the table. Don't sign any release forms or anything like that. These things should still be looked at as advertisements, not as research, not as recommendations. You go to cdarplus.ca to do your research. That's where it's an official government website where the official filings of these companies are going to be found. That's where you go for research. Okay. And you do your own research, and you also talk to a professional investment advisor, because these are going to be general and impersonal conversations that are not going to constitute any investment advice whatsoever. Again, none of us know what we're doing who make videos for companies. Otherwise, we wouldn't be making videos for companies. We'd be doing for a living, I suppose. So no guarantees here, besides that there will be a bunch of forward-looking statements in these conversations. Explorationists and mining companies, development companies, they're typically forward-looking. They're typically hopeful. So yeah, be aware of that fact. Talk to an investment advisor. Please do more research. And unless you like losing money. Again, there are disclaimers on your screen right now. Please read them and be careful out there. And yeah, I guess that's pretty much it. I am going to kick it off with the first CEO barbecue for this week, for which I'm going to have to fly to Canada, where I will have to be, well, actually, not only Canada, I'm going to have to be at multiple places at the same time, including Ontario and BC in Canada, where I'll be looking for gold, silver, copper, and molybdenum, and hearing about them from Gary Thompson, the CEO of Brixton Metals. This company is listed as BBB on the Ventures Exchange in Canada, where an average of about 250,000 shares trade each day, with a 52-week high of 22 cents and a 52-week low of 9 cents, with a market cap of about $44 million and about 460 million shares outstanding. Today, this is a 10-cent stock, give or take. There are 100 million warrants, and 28 million options, leaving the number of fully diluted shares at about 590 million. There's a couple of famous names on the share registry that you might recognize, including Eric Sprott, the man himself, as well as Ivanhoe Electric for a smaller portion, and BHP for a larger portion of the company. There's a bunch of institutions in here. You might recognize Crescent Capital as well. And a financial statement, which is dated, the last financial statement, which is dated March 31st, shows me $19 million in current assets, most of which 12 million to be specific in short-term investments, 3.2 million in actual cash, 3.5 million in account receivables, and a bunch of smaller stuff on there. Account receivables mostly in the form of a BC exploration tax credit, by the way. I don't see any long-term debt or any major liabilities here on the balance sheet that are out of the ordinary. There's about $220,000 in account payables. There's a small lease liability, some money due to related parties, and so on. Again, mostly smaller expenses. The same financial statement from March also tells me that on average, over the last reported 6 months, Brixton recorded about $240,000 a month in administrative or bureaucracy expenses, as I like calling them, with management fees, salaries, and salaries, benefits, and professional services and whatnot, and office expenses. They're making the majority of that bureaucratic spend, if you want. Whereas about $210,000 went into exploration expenditures, and that's per month on average. Again, over the last 6 months, it was mostly focused on the Thorn property, which I'll be telling you more about in a second. And it was mostly focused on, mostly spent on the camp transportation and the analysis of the package. That's what made up most of the exploration costs here. In terms of ratios, that would mean that about 45% of the total cash burn rate went into the ground, and about 55% went to administrative expenses. As though I would like to bring it to your attention that this financial statement is nothing more but a snapshot in time. In this case, it is specifically at the end of March of this year, but this only really covers 6 months of time, and it doesn't always give you the complete picture. Exploration companies are fluid beings, and finances will have changed by the time you're watching this. So please head over to the company's website as well as setterplus.ca to look at all the numbers yourself and make sure you're getting the full picture. Listening to me speak here, you think that I like numbers and that I know what I'm talking about, which I don't. And I don't. I mean, sometimes I kind of do, but most of the times not. And if that's already confusing, don't worry. I've managed to confuse myself too. So I'm going to move on to the projects now. And as I mentioned there, most of the money here gets spent on the Thorn project as it is. This is kind of the focus for the company. It's a huge claim block of over 2,800 square kilometers. So that's 2,800 plus square kilometers, which is bigger than the country of Luxembourg. Actually, I did look it up. And this Luxembourg size package is located in northwestern BC. So it's up there close to the Yukon border, which is also how you get to the property, actually, by a 45-minute flight from Whitehorse, which from Vancouver, you'd have to fly commercially to Whitehorse to get a 45-minute flight to this property from Whitehorse. And this property hosts 16 to date identified large copper gold targets, supposedly with different styles of mineralization related to porphyry. Of course, this is BC, and epithermal environments as well, given that it's a Triassic to Eocene volcanic plutonic complex. I'm trying to sound smart here. There are three main targets worth discussing here, with that being Camp Creek, Trapper Gold, and the Outlaw Gold target. They are respectively a copper gold porphyry and a gold and another gold target, with the largest program to date having been completed last year for a total of 16,724 meters, with about a 60% split between Camp Creek and Trapper. And so with Camp Creek, that included some pretty deep holes of up to 1,600 meters, with some notable intercepts being 717 meters of 0.2% copper, 1/2 of a gram of gold, 2 grams of silver, and over 450 ppm of molybdenum. And that's again at Camp Creek. And then there was 54 meters of 1 gram, or a little bit more than 1 gram of gold over the Trapper. For 2024, Brixton is planning an over $12 million drill program on Thorn, where both Camp Creek and 3 more copper targets will be drilled. So that will be the focus of the discussion today, but it won't be everything, because earlier this year, Brixton also reported some grades from Hog Heaven. Hog Heaven is that's their project in the US. I actually at the beginning said that I'm only going to have to be in Ontario and BC, but I'm also apparently going to have to be in the US, because this land package houses a past-producing high sulfidation epithermal silver, gold, lead, and copper system that was operated by, among others, Anaconda Copper, and it was operated between 1930 and 1975, producing almost 7 million ounces of silver, so mostly producing silver with some gold, lead, and copper as well. And Brixton now wants to find the source of that system, which, according to the internal geological thesis, as far as I understand it, is a deep porphyry. Now, I said Brixton is hoping or wants to find that, but they're actually hoping that someone else is going to find it for them, and that's Ivanhoe Electric is who they're hoping will find it, because that's who's operating the project. After in 2021, Brixton and Ivanhoe signed an 11-year, $44.5 million earn-in JV for 75% of the property, with Ivanhoe drilling 82 meters of about 0.6% copper, 0.3 grams per ton gold, and 38 grams of silver at about 570 meters of depth this year. And so the strike length, or last year, and so the strike length currently sits at around 800 meters. But the company says it's prospective for growth, both at depth and long strike. So hopefully we can touch upon Hog Heaven later on as well, and some of the other properties. And as it might have become clear already, I do like listening to myself, of course, as one does. But I won't talk to you too long anymore. I'm not going to talk through all the other project that Brixton has. I do hope for a quick update later on as well. But Gary, let's maybe kick it off with the flagship asset here, because one look at the map already kind of makes me a little uneasy about the potential remoteness of the project. As I mentioned, to fly in from from Whitehorse, Hog Heaven. I'm getting my words mixed up, but that's also maybe why the project hasn't been worked yet properly, but by others in the past, because I believe it was briefly looked at in the late 50s, and then back again in the 80s, and then over 10 years ago now, you got your hands on it. You started drilling it. There's almost 100 kilometers of drilling being completed on it between now and the historic stuff. But so Gary, there's basically two main things that I'm wondering here. One is about the timeline that I want to get to later on, but the other one is the previous operators and why they didn't continue working on it back then. I mean, is it the remoteness thing, or is it something else that caused them to stop working?
Sure. Well, thanks, Antonio, and it's a pretty good introduction to the story. Yeah, it's a classic exploration play. There's an interesting story around this, and you're right. The original discovery was 1952, and there were many operators here. I think there was over a dozen companies, and typical mining cycles. I mean, there was a study that was done recently, I think 2020 study by Riddell and Thompson, and they looked at the Northern Cordillera and what's it take to make a discovery on these things. And it turns out it's, 15 years, 5 companies, couple mining cycles. That's just the nature of exploration. Somebody goes, and sometimes people are looking for, one commodity and they end up finding something else. But I think that's fairly normal in these camps. Getting through a mining cycle, somebody will change focus, and I think the benefit that we've been able to put together on this thing is it's grown. We didn't start with a country-sized claim block. We started off with about 190 square kilometers originally in 2010 when we acquired the project. And over the years, we've continued to data mine all that data. I mentioned there's probably a dozen companies were in there, and some notable companies like Chevron Minerals. As you recall, back in the 80s, a lot of the oil and gas companies had mineral divisions, and Chevron was one that did quite a large regional program in this area. Barrick was in here for a short time. Caminco was some of the early operators that made the original discovery at Metla and here at Camp Creek where we're working. So it's not unusual to have many companies over the years, and again, looking at one thing or another, and for whatever reason, decided to move on. But I would say infrastructure or the lack of infrastructure has certainly played a role in that, and the reason the opportunity exists today is largely because of that. I think what changed for Brixton was in 2011, a new camp was established. And prior to that, by the way, operators would use fixed wing aircraft and fly into some of the nearby lakes, and then they would helicopter people and equipment in and around the project, depending on where they were working. But in 2011, there was a new camp established, which is now our main camp on the project, where you mentioned you could fly 45-minute fixed wing flight from Whitehorse to the camp. We've got about 1,000-meter airstrip there, so we typically use caravans have been our main workhorse aircraft for people and supplies and fuel, and then it's a helicopter support program around that. So that changed the game, I think, for us, in that while it's still relatively remote, it does change that aspect of it. And if you look at the claim block on the southeast end of the claim block, there was a gold mine that operated up until about 2000 called the Golden Bear Mine. It was a high-grade gold mine. and there was a road access into that. That mine has since been deactivated, but there is still potential road access that we're looking at, as we get into infrastructure builds and that sort of thing. So right now it's air supported, but I think longer term there is a path for some infrastructure.
Is that part of the reason, or is there also something else? Because you as well. I mean, looking at the Lassonde curve, if we're to believe that you're falling a little behind on schedule, as in that there should have been a resource on this project already, if that curve is correct. So, is that what slowed you down over the years, or is it something else adding to that as well?
Well, we did publish a resource, by the way, in 2014, 21.5 million silver equivalent ounces in the Camp Creek corridor. However, where we're drilling now for the porphyry, we found out, after 10 years of exploring there, that there's a blind porphyry at depth, and now we're working on that. But I guess a couple things that changed for us, and if I just back up a little bit, when we originally acquired the Thorn project, what piqued our interest in it was the gold, the amount of gold showings that we saw on the project. So that was quite intriguing to us. You have the sediment hosted zone, which you mentioned earlier, the Outlaw, which is a 5 kilometer gold and soil anomaly. And again, that was worked by Chevron back in the 80s. But I think what really changed for us, and again, we had this vision of more of a gold project. So it's kind of morphed a little bit. In 2011, we drilled pretty substantial silver hole. It was hole 60. It was actually our second last hole at the end of 2011, and we drilled 95 meters of 900 gram silver equivalent. It was silver, 628 grams silver, 1.7 gram gold, plus lead, zinc, and copper. So that actually attracted the interest from Hecla Mining, which is still a shareholder, and Rob McEwen originally. And then what really sort of shifted gears for us was around, and this is sort of time goes on, of course, the market's been, I would say the last decade's been, we've been bumbling around the bottom of the market. If you look at the TSX composite index, we're at what, 566 today. 21 was, the index was 1100. And so I feel like we've been kind of bumbling around the bottom from a market, just putting us in the TSX Venture Composite Index. Just the money flows have been fairly dry, although we have been successful in attracting, as you mentioned, BHP, the world's largest miner, and now we have 3 billionaires as shareholders. So we must be doing something right there. But just to go to the story, how it evolved. So from the original claim group, we had 190 square kilometers. What really changed for us was 2018, the BC government, there's an open file you can go download online, a BC Geological Survey open file that looked at 80,000 regional geochemical samples that were collected by the provincial database, and they did a reprocessing for copper porphyry weighted sums. And what that means is just an algorithm that runs through and identifies anomalies based on the inputs for a copper porphyry system. And what we learned from that report was there was a very large anomaly to the south of where we were working for many years. In fact, it ranked as one of the highest ranking copper porphyry anomalies in the province of British Columbia of any areas. And so we were pretty excited by that. And for the most part, it was open ground. So of course, in British Columbia, they have online staking through MTO. So we shortly thereafter, we staked up quite a big block of land. And subsequently in 2020 and 2022, we acquired 3 separate land parcels, one from Kodiak Copper, which had the Trapper claims, which we didn't own in 2020. And then also Stahini Exploration had the original Metla claims that I mentioned that Caminco discovered way back when. So we acquired those, and then another private group had a pretty big block. So that kind of got us to where we are now, which is 2,800 square kilometers. And the premise of that is copper porphyry. And so we've been doing a fair amount of work over the years. And I guess part of the, I guess we had the luxury of assembling this land position because it is relatively remote. It's in the northern extent of the geological extension of the Golden Triangle, which everybody knows about, or familiar with at least. Well endowed, prolific copper gold district with hundreds of millions of ounces of gold in reserves and other deposits and resources that some are being mined and some are under development. So we're on that geological trend. The fact the opportunity exists is because we're further out, a little more remote from the rest of the pack, if you will. So it's kind of changed for us around that 2018. And of course, our budget started to grow significantly. Prior to that, our budgets were quite small in the $1 to $3 million range. But if you look at, like, last year was our biggest budget, $14.5 million. There's a $12.5 million budget this year. It was 11, 2-3 years ago was 11, and before that was 8. So the progression of capital expenditures, and I think our discovery rate is actually quite high. While you would think there should be a resource here, I think what we're still trying to do is determine where the best zone or best deposit is. So we're still trying to figure that out. And because we have so many target areas, it does pose a bit of a challenge for us with whatever budget we have. We have to rank these things, and we do this an annual ranking process based on the data collected to determine where's the best bang for our buck, where should we be spending our drilling dollars, and that's a bit of a process that we rerun every year. Some go up the curve, some go down the curve based on the analysis and that ranking process that we do. And this year obviously is a big push for copper porphyry deposits. So when we did that re-ranking, these areas obviously like Camp Creek, we're getting a few holes into Camp Creek, which has been our over the last few years, most of our budgets have been spent chasing this deep blind porphyry discovery that we made and confirmed in 2021. But we didn't want to get too buried into that when we could have something maybe closer to surface that's more attractive, shallow. And that's what we're doing this year, is trying to test these other targets like Cirque, which we'll be hearing a bit more about. Trifecta is another one south of Camp Creek. And then the North target, which we haven't done that much work on, but we're kind of gearing up to drill that later in the season as well. So one thing we know about porphyries, and I think a lot of people that are in porphyry exploration, is that it's quite well known that these things form in clusters. So if you have one well-established porphyry, there's likely more in the area. And you look at a place like Australia, which Cadia is a well-known deep block cave mine. There's now, I think, 6 or 7 deposits in and around Cadia in Australia that have developed over time, and some are deep as well that were blind discoveries. So it's just a matter of fleshing these things out, and there's nothing easy about porphyry exploration, as people will know. But when you get onto these things, they can be company makers, and that's we're shooting for the fences here. We're looking to make a big discovery, and that takes time.
A smart man once told me nothing that's worth doing is easier. Nothing easy is worth it. I'm butchering quotes here today tremendously. And that smart man was probably an influencer online, so it's not even worth listening to the quote. But I do get your point here, Gary. And I understand where you're coming from the corporate strategy perspective, which I do appreciate. When do you think, or when would you expect to have a resource on this project, though? How much more drilling? So if you're not certain in terms of time, maybe in terms of drilling, like how many more meters do you want to put in this thing before you can safely come out and say, like, this is at least a decent portion or a decent number of the targets that we have that we're going to include into this resource?
Yeah, it's a good question, and I think it's still going to take some time. I don't think we want to rush to any one resource yet, but I was pretty keen on the Trapper gold target over the last few years. It's had some pretty remarkable intercepts. I think that's getting close to put into a resource. We are planning to do some drilling there this year to try and connect the drilling that we've done over the last 3 years with some of the historical drilling. So I think realistically, I think we're a few years out, but I do recognize that at some point we got to put a pin in some of these and start to put them into resource category. It helps investors and analysts alike to put some valuation on it because it is hard to value a exploration company. It is a speculative play, and how do you put a value on something that does not have a resource? But we've been fairly transparent. You can go to our website and download our drill results from the last year's and previous seasons for both Trapper and Camp Creek. So anybody can go and download those drill results and build their own model and come up with their own numbers. Yeah, we're trying to find, I think, the prize, and I think we'll know it when we hit it, because we won't be sitting at $40 million market cap, and that's something that we're working on.
Let's then maybe talk about what exactly you'll be including in this resource and take it sort of from a high level perspective, drill down a little bit here. But you are actually going to be drilling soon, as far as I understand it. When is soon, and where exactly are you going on the property? You just alluded to something, but tell me more about that.
Yeah, we've been drilling now for, we started drilling at the end of May, actually. So we're just completed our first deep hole in Camp Creek. The drill has now mobilized up to the Cirque target, which is about 3 kilometers to the east of Camp Creek. So it looks like this may be a separate porphyry center. As I mentioned, these things do form in clusters. So we may be on to another porphyry center there. And, we just started drilling, so I can't really comment on it. But so stay tuned on that. That's certainly an interesting one. We do have 2 drills turning. So one just completed a first deep hole in Camp Creek. That's now moved on up to Cirque. And we have the second drill pretty deep into Camp Creek as well. And the strategy there for this year was not so much to drill it off and get it into a resource, but what we've been trying to do at Camp Creek is find the higher grade core of the system. We've had some pretty good intercepts to date, and they've been fairly broadly spaced, 200 to 350 meter spacing. So there's, I think, room to find some high grade within those spaced holes that we've drilled already. And that's what we're trying to do is really find the high grade part of the system. So we haven't closed it off yet. There's still lots of room to grow. And that's the other thing, before you start pushing into a resource, you kind of want to know what the limits are, and we can do a back of the envelope internal estimate ourselves and determine whether this thing could make sense to move into a resource and or development story.
How many meters do you think you're going to get out of that? I think you mentioned you want to spend $12 million, $12.5 million on it this year. So quite a lot of money. How many meters are you getting out of that?
Yeah, and it kind of depends. We've given ourselves a range of about 12,000 meters to 17,000 meters. And part of that, the reason for that range is depending on how many deep holes we end up drilling. So what we did is we set out our initial phase program, which was 2 to 3 deep holes in Camp Creek, and then a couple holes in Cirque, maybe a couple holes in Trifecta, and a couple holes in the North Target without really giving a depth to them. I mean, you probably got to get, I'm going to say, at least 500 meters into them, and then determine how deep you go based on what you see in the core while you're drilling. Put it this way: if you're drilling 500 meters and you're not getting good grades, you're probably not going to push it much deeper. So that'll come. So the latter part of the season and the meterage will depend on, again, how many holes you actually have and how deep you go. Like using Trapper, for example, I think our deepest hole there was 450 or something. So it's been the Trapper target's been exciting because it's shallow. We've been getting gold from surface down to 400 meters. We had one hole that was 400 meters of a gram. So that's an interesting one because we don't have to drill deep there yet, and we're still exploring at surface mineralization. So that's the whole objective for this season, is to what else can we find that would be an exciting near surface target. I don't mind necessarily going deep if it's mineralized, and so would rather find something shallow. It's just easier, lower cost, and So that's the objective there. So
Mm.
yeah, we've kind of left the latter part of the season based on what we find in the first part of the season that will adjust, where we go.
Given the size of the program, that would also make sense to me. But so I'm not a math genius, but 12,000 meters, 12 million bucks, $1 million per 1,000 meters, $1,000 per meter. Is that about what you think the average is going to be?
Well, these deeper holes, as you get deeper, it costs more. So these deep holes in Camp Creek, they're $1 million a hole,
Hmm.
um, pretty much. Again, that's why it'd be nice to find something closer to surface. You can get a couple holes into it, 3 holes into it, perhaps. The normal hole is 2 to 300,000 is a normal. And what's interesting is the first 500 meters goes really quick. You can bang that off, and depending on the drillers and what kind of rock you're drilling, but they can get down there in 4 or 5 days. 100 meters a day is pretty normal for the upper part of the zone. As you get deeper and you get into 1,000-meter range, the drilling drops off to, you might get 30, 40, 50 meters a day. So your drilling rate goes down, and you just everything else is still burning cash. So your costs, that's why the costs go up on these deeper holes, is because the time it takes to get
Yeah,
30 meters, a day.
sure. And again, and then it's all grade dependent. Like you want to find something that is worth finding at 1,600 meters. So
Yeah.
something that is higher grade than what you had so far, and maybe this is also something we can talk about. But you're hitting a couple of new zones that weren't included in your last year's drilling. Maybe you can talk to me more about them from the geology perspective and alteration packages. And well, yeah, let's start at the alteration package on the new zones. Is it comparable to what you were drilling last year, or how do you look at that?
Well, yeah, I mean, it's different. What we're seeing, for example, at Cirque, there was some historical drilling there in 1965. And what's interesting about that is they did hit intermittent copper within the drilling, but they never analyzed most of the core. And the fact the core was uniquely preserved, it was in a jammed up in a from 1965, and I remember boxing that stuff up a couple of years ago, reboxing it into new boxes because most of the the core boxes had disintegrated. But what's interesting about it is that they never analyzed a lot of that core. And when we took it back to camp and had a look through it, there was appreciable amounts of copper mineralization in it. And alteration, like classic porphyry, potassic alteration, which is usually the core part of the system. And we're seeing, sericite and argillic type high level alteration. Wow.
What about the surface? I'm sorry for interrupting here, Gary. What about the surface alteration at Cirque? Is that argillic as well?
Yeah, we're seeing variable amounts of potassic and phyllic to argillic alteration at surface in and around the cluster of historical drilling that was done. And we did some surface sampling there as well and got some pretty interesting copper samples at surface. And in addition to that, a few years ago, we flew an airborne mobile MT, we're calling it, which is a magnetotelluric survey, which is an electrical response. And that identified a pretty interesting conductor, a near surface conductor down to about 400 meters. And as part of that survey, we also got magnetic. So we had done some geophysical magnetic inversion on that. So we have a coincident magnetic inversion anomaly. We have a coincident conductor from the EM. And then we have obviously surface alteration and some pretty decent copper numbers at surface that were sort of all within this, still a pretty large area, 1 by 2 kilometer area. And part of the challenge was, I think we had done some soils there before, and I think they were a bit discounted, but when we revisited a bunch of those samples, they were actually, I think a lot of those samples were collected in what is called glacial moraine alluvium material. So not actual residual broken down soil from the local rock source, if you will. So there was a bit of some false negatives there. And so the recent work that we're doing is actually turning that around and saying, actually, no, there's something here that we should test. And that's what we're doing now. We're drill testing it. I guess time will tell what's there, but that's the hope. There's actually a porphyry there that is separate. We've have done some age dating as well, and it seems to be later than the Camp Creek porphyry age dates that we have by, could be in the neighborhood of 2-3 million years difference. And so that's important because that's not the same, doesn't look like it's the same age as what we're seeing in Camp Creek.
Does that mean shallower mineralization potentially?
Not necessarily, but I mean the what we're seeing is evidence that it is shallower at surface, but yeah, we'll have to see once we get some drilling on it.
Right. Well, why I'm asking this is within the concept of you got to find something that's worth finding at that depth. And with last year's drilling with hole, I believe was 262 specifically, there was strong argillic alteration on surface and there are other stuff where checking out. And interestingly, that's also where you drilled into the polymictic breccia, but the grades weren't that good, even though it was rather deep and all the other fingerprint stuff was there. So what have you gotten out of that hole, and like what do you think is missing that you can sort of apply to your other targets so that you don't go and drill another 1,500-meter hole that was not worth drilling?
Well, yeah, that's the million-dollar question, isn't it?
Hmm.
One of the things that we are doing, and Brixton's partnered with University of British Columbia has what's called MDRU, which is a Mineral Deposit Research Unit. And we're part of a BC porphyry study. There's a dozen companies that are contributing to this. They got NSERC government grants, the university is co-funding it, and industry is co-funding it. And it's a collective porphyry study. And what we're trying to get out of that study for us, and we have a master's student working on this, Camp Creek, is not only age dating, but looking at the alteration patterns to help us vector to the higher grade part of the system. So that's been an ongoing study. So they're collecting alteration data down the hole and in additional to rock samples in a broader footprint. So we're still in the exploration phase here. We're trying to use that data to help us vector to the core part of the system. Mm. So that's a bit of a process to go through, and I think it'll be great after this season because we're collecting a lot more data than we have in the last few years, and that'll just go into the data that we have to remodel that and perhaps re-rank this thing for next year. Where do we go next year, or even this year, perhaps? I mean, one of the things that we are doing as well on our core is taking XRF samples. So for the same assay interval that we would send off to the lab, we're doing XRF channel to create a pulp on that same interval and do XRF analysis there. So we can get some sort of real-time data that we can help to use in the field rather than waiting for a month or 2 months for assays to come back. Mm. So that's been helpful on a sort of real time. We got a pretty good idea. I mean, one thing about copper exploration, if you have copper sulfides, you can visually estimate approximately what the assays might be. But XRF is just another tool that helps to build confidence in, hey, should you keep drilling or not?
You did hit some high sulfidation epithermal veins, I believe, that you hit in hole 285 last year. Is that what you were talking to me about right now? Like, is this the thing that relates to your whole thesis for the region that will guide your exploration this year? Or, I mean, is that part of the puzzle, or is it not as important?
I think we're well below the high sulfidation part of the system. Like, it's known that these porphyry systems, it's an elevation thing. Above the porphyry, there's usually some high sulfidation part of the system. Not always, because it can be eroded away. In our case, the high sulfidation part of the system is still intact, and the porphyry is relatively deep. So the high sulfidation part is really it is helping us guide a little bit that we know we have to be below that part of the system. And in fact, most of our deep drilling in Camp Creek have intersected high sulfidation mineralization, and which is the reason why this thing was discovered originally, because it's really intensely altered. But of course, like I said before, it took us 10 years to figure that out, that we had to continue to go deeper, and even previous operators before us were drilling shallow, drilling on the veins, and it took us a few years before we realized that, hey, no, we got to keep going deeper here.
Does the depth at which you think you currently are in the system also explain the anomalous molybdenum? And do you think that's going to change as you move along as well?
Yeah, we have that same question, and I think the molybdenum is, it can be a halo in these systems, but it also can be adjacent to it. So I think our view right now is, don't chase the moly, chase the copper, and the moly kind of does its own thing in a way. And if you look at that hole 261, which was our deepest hole, the moly continued to increase all the way down the hole, or even in the bottom was the strongest at 261. So when we model that up, we have a moly shell and we have a copper shell. And for us, it's like, well, okay, the moly's kind of doing its own thing, and let's just focus on the copper, and that's kind of what we've been doing. But I think if you take a step back and jump over to the Cirque target again, which is 3 kilometers to the east of the Camp Creek target, all indications is that we're dealing with a shallow system there, at least shallower than Camp Creek. We don't see as much high sulfidation. There's some perhaps high sulfidation mineralogy there, but for the most part, we're not seeing that. Like we don't see potassic alteration in Camp Creek because we're still in the high sulfate part of the high sulfidation system, but up at Cirque, we're seeing potassic alteration at surface there. So that suggests that we're actually that zone of, can't quite call it a deposit yet, but it looks like Cirque is shallower, and we'll see when we get drilling there.
But you're not using the moly, or your understanding of the moly in the system, as a tool for targeting at all?
Well, it comes into play. So MDRU developed this porphyry footprint model. We call it the MPIX. It's a porphyry index calculation. You take proximal elements over distal elements, and in that calculation is moly, is in there, lithium. There's a host of elements from the proximal over the distal, and that calculation helps you guide whether you're vertically where you think you could be vertically or laterally within these porphyry systems. They have a footprint to them geochemically, and so we've been able to help guide us in that where we think we are. So yes, that the geochemical work that we're doing at Cirque is the reason we're out there, is it has support of porphyry index numbers out there, and moly plays into that calculation, and as does copper.
Is the geochemical work that you're doing also helping you avoid some of the issues that you had last year? Like you encountered poor ground conditions, I believe, with some of these holes. Yeah, what do you think? What was that related to? And is there something you can do this year to avoid that not repeated?
Yeah, unfortunately, not really. Those rock mechanic issues they're just there subsurface, and you don't really know. I mean, we do have a sense of structural controls here, and there's these post-mineral dikes that seem to utilize these structures. So we are, I guess, trying to not hit a bunch of dikes. But it's hard to avoid. We do know there's difference. Like if you look at the Porphyry X unit, is quite a competent unit and it drills quite well. But if you look at the host rock, which is the Porphyry X, is intruding into these older Stahini group sediments, and those can be quite well broken and difficult to drill. They can be quite well mineralized as well, but they have been posing more challenges from a drilling perspective than the Porphyry X unit. But you can't really, from surface, I don't think, determine that. That's more structural, maybe more of a structural geology thing. If you find a damage zone that creates a lot of problems for you, then maybe try and avoid that. But if it's well mineralized, then you usually chasing the mineral more than anything, and that's becomes a rock mechanic issue if there ever is a mine there that the engineers will have to work through regardless.
Anything else that happened last year that you're like, oh, that should not have happened? We're not going to repeat it this year, or anything else that you can give me as an example?
Um, I mean, not really. It's just those are typical drilling challenges. One thing that we did do is, and the drillers really appreciate is we got some bigger drills in because part of the challenge we had, like if you look at hole 184, which is one of our better copper holes in Camp Creek, we drilled. Um, I think it was 318 meters of 1% copper equivalent within 820 meters of a 0.5%. But right at the bottom of that hole was some of our better grade. That 318 meters of 1% was really the bottom part of that 1,200-meter hole. But the drill just couldn't go any further, and they were getting stuck. And it was like, well, do you want to lose the hole? Nobody wants to lose 1,200 meters of rod down the hole. So we decided to pull out and kill the hole. So we've learned that we need beefier drills, and even the driller said that yeah, it makes a difference when you got a stronger drill with more power and more pulling power and more horsepower. So that's what we did this year. Is we brought in some beefier drills that allow us to manage the deeper holes.
But so when you said larger drills, I kind of imagine sort of the diameter. You're not doing PQ or anything like that.
No, we're drilling as much as we can. We'll drill HQ
Okay.
down to about 1,000 meters.
Hmm.
But the hole I mentioned, that 184, we were drilling NQ and we're having difficulties at 1,200 meters with NQ. So now we have the drill that can almost drill that with HQ. So yeah, I mean, look, we'd like a reason to go deep. We're not necessarily gung ho to go deep, but we will if the mineralization is there. And yeah, we're still in that exploration discovery. You mentioned the Lassonde curve. We are still in that discovery phase. That's kind of where we are on the curve.
Good, good. We've gone kind of into the weeds, if you will, there for a moment, but it's better helping me understand how you think about these things. It's helping me gauge the risk of what you're doing here as well. Are you? When do you think you're going to be able to put something out to market in terms of results?
Yeah, that's a good question. We were hoping we would have something in July to the market. Yeah, I think we're probably still thinking July would be a reasonable time, late July, I'm guessing. But yeah, this will be a test for the labs because obviously with COVID, pre-COVID, we were getting 3-week turnaround at the labs. During and post-COVID, we were 3 months, 4 months. So this will be a test for the labs on the turnaround. So hate to say, or I can't really be sure on when we'll get them out, but we'll get them out as they come in. We'll get them out to market.
Sure. But July, well, why I'm asking this is because I'm just thinking summer doldrums, right? Most share prices right now go from upper left to lower right, and the summer and tax loss selling and tax gain selling is not going to make any of that any easier. So I'm just thinking, how do you keep the market engaged during the summer months? It's good that you're going to have results coming out. You doing any met work this year or anything else?
No plans for met work this year, but I think it's something that we've been talking about, again, kind of feeding into a resource, is looking at maybe doing some of that next season as we start to gear up. That'll be an important factor in any resource estimate.
Mm. And why this matters, why I'm thinking about the share price is because I'm obviously thinking about money. Thinking you said you want to spend about 12 million bucks on this. Last time I checked, as I mentioned at the beginning, your current assets were about 14 something. So those short-term investments that you have listed on the balance sheet, I mean, can I treat it as cash, or like what's that?
Yeah, those are just term deposits.
Okay. Yeah, sure.
Yeah, I mean, we don't have any debt. It's cash. Our 12 million will 12.5 million budget will get spent this season. I mean, our window, you mentioned the burn and that the last 6 months have been pretty quiet for us. I mean, our season is from May till October, and that's where most of our spend is in that 6-month window, is when we spend the budget. the G&A is a carry for our team and yeah, in the office and everything on the off season.
What are you budgeting for G&A on the off season? Because I mentioned, what did I mention? Like 240, 250 a month on the busy season. What are you doing on the off season?
That's pretty much, we have about a dozen full-time employees and like right now we peaked at 59 people in camp. So when the camp's operating, obviously we're spending considerable more money in camp, but our G&A is pretty steady at about two and a quarter, 250 a month.
Okay, good. But essentially, you're going to have enough money to get a whole bunch of results onto the market and hopefully create excitement that way, so you don't have to raise at these prices that you're at right now.
Yeah, that's the plan. I mean, we're fully funded for this season, and it's going to be depending on the drill bit and the results, what we get out, and yeah, we'll have to wait and see. We're not planning to go to market anytime soon here, and hoping that we have some big holes out of this season that excites the market a little bit that would allow us to raise funds. We don't have cash flow other than some option payments, so we're going to have to raise funds ideally sometime before the end of this year for 2025, and yeah, we're hoping that it's at much higher levels than where we are.
What are you hoping for specifically this program is going to result in? I mean, you're sitting between 9 to 10 cents, fluctuating a little bit here, but it's pretty much definitely a 52-week low.
Yeah.
So 3-year low. I mean, it's stock price is down. So what are you hoping at? Where would you ideally want to raise money at, or realistically?
I'd like to raise money at $1, put it that way. So what's it going to take us to get from 9 cents to $1? Well, it's going to take a brand new discovery, I think, or even could even come out of Camp Creek. I mean, comes down to a drill hole that kind of blows the socks off of people. I'd say we have had some pretty significant drill holes, but it's been, I think, too much time in between those amazing drill results that people, I guess, maybe get discouraged on it. So it's going to come down to a big hole that's going to drive new interest in the name. And that's what we're gunning for, is something big.
Mm. But realistically, I mean, I'd be happy for you to raise money at $10, but realistically, what do you think is doable by the end of the year? Like, not think that'd be way too forward looking, but what do you hope is doable?
Yeah, I mean, we're trying to mitigate that as much as we can. I would like to see it in the 50-cent range. I think that's a reasonable objective for us. I mean, we did tag 30 cents, not last season, but it's been about 18 months now. So I think it's possible we could see 30 to 50-cent range on a significant new discovery.
Yeah.
But again, we have to deliver that, and the market's got to like what they see. So all we can do is our best on the ground and drill the best holes we think we can that we can drill with the budget we have.
Do you? I forgot to ask you about this, but I'm seeing it in my notes here. Community relations of First Nations and other permits. Is everything in place for you to go and drill all 12,000 of the planned meters?
Yeah, we just received our updated multi 5-year permit end of last year, so we're permitted for the next 5 years of as much drilling as we could do, and some. And we do have Diana Christensen is our community engagement person, and she was hired about a year ago, and so we've been quite active on the First Nations front. We do have an overlap with Tahltan First Nations and Taku River, Tlingit First Nations, and so we've been quite active. And in fact, last year we had record numbers of First Nations employees and contractors on site. So we're working hard on continuing to build those relations and support the local economy there.
Okay, good. You also had a note to, it's not necessarily related, but I made a note to ask you about royalties. You recently had a news release about about reducing royalties on this specific project. What's the situation from a royalty perspective right now?
Yeah, so overall, the claim group, because it is such a large block, and we did stake a a lot of that ground. I would say on, overall, it's a pretty low royalty encumbered project. In some cases, I would say for the most part, it's zero. When we acquired the Trapper claims from Kodiak, there was some underlying royalty owners there that we also cleaned up as part of that deal. So there's no royalties on Trapper. The Camp Creek original claims in this area for us were in the Camp Creek area. So there were royalty acquisition that we bought down was part of that strategy, is to just reduce the royalty overburden or encumbrance here, if you will. And I think, and from a longer term perspective, why that's important is people may not get it. Why did you buy down a royalty? Well, if you look at a mine scenario, and I use the example of Red Chris. I know it's a producing mine, but as an example, a 1% net smelter royalty on Red Chris sold for $130 million. Okay, so it's a mine, of course, we all know that's great. It's going to produce for a long time. But, we basically bought out this royalty holder for, about, I guess it was about $250,000 in stock. So I think it was a fair trade for us to clean it up with a party that we've been negotiating for quite some time on. So, and there's a small royalty over on 1% on the Metla claims that we acquired from Stahini. But other than that, I'd say it's fairly low to no royalties on the overall package, which will make it attractive, right, for a potential buyout down the road.
I want to talk about that last part, potential buyout down the road, of course. But who's holding the rest of the royalties here?
So there's some original claim holders that own the I think it's 1.5%.
Let me put it that way. Why I'm asking this, because I'm thinking, is it management? Like, does management hold any royalties here?
No, it's not a management. These are all third party original claim holders. Yeah.
That's fine. Talk to me then about potentially selling this thing, which is, I suppose, where you want to go. You're making it easier for a potential acquirer with the royalties, but you still have BHP in there. Do you think that's is having BHP in there that bigly? Do you think that could potentially scare off other potential acquirers, given that there's so many majors active in the BC region? So, yeah, talk to me about that.
Yeah, I mean, you never, I think what we try and do is de-risk it as much as we can, and that's been our strategy from day one, is to unlock the value here and put together a big claim group in a good jurisdiction, lots of copper porphyry potential. I think BHP has a front row seat here. They have a 19.9% in the company. They obviously have an advantage over others to make a move, but that doesn't preclude other copper developers to make a bid on it. And I guess that would be a good thing for Brixton if we had competitive bid on a takeout. But I guess it's going to come down to when is the time, and I think we've got some work to do, I think, to continue to de-risk this thing, show that we've got multiple porphyry centers, which is what we're trying to do this year. And I think that's going to potentially change the game for us, because we just don't have Camp Creek. We've got other porphyry targets, other porphyry centers that we're working on, and also some quite large gold targets that we want to continue to advance as well.
I think giving an answer to the when question is very challenging here from a timeline perspective, but maybe you can talk to me about state, as in what's the state of the project at the point that BHP says, or whoever else says, this is good enough, let's make an offer for it. Like, how far up the Lassonde curve, we've been talking about it here for an hour, but how far up the Lassonde curve do you have to take it?
That's a good question. It's a difficult one, because you don't really know. And I think it's kind of part of the FOMO, isn't it? If we see copper do a big move, so I could give you an answer today, which is probably 3 to 5 years out. But all of a sudden, if we see, $10 a pound copper, all of a sudden, I think the FOMO kicks in, and that could spark a lot more activity sooner than what we might all think. Right? So I think we need to have in a perfect world and there was more capital coming into the space and we had a better share price, we would be spending a lot more money per season here to move this thing up the curve sooner than later.
But what does that mean? I mean, does that mean that at different parts of the cycle, projects get taken out in different spots of the Lassonde curve? And are you saying like if copper runs a whole lot more, we might get taken out sooner than if copper stays flat? It might take us longer to get a bid on this thing.
I think so. I think that's the case. And part of that is tied into, just as I mentioned earlier, just the TSX Venture Index. The money flows have been going out of our sector, chasing quicker returns, and we haven't yet really seen the money flows come into the sector. I mean, I think Brixton's been fortunate that we've been able to raise substantial amount of capital to date. We've got about, I don't know, north of $50 million. At the end of this year, we'll be north of 60 million into this project. But these projects need a lot of capital, and we're just not spending enough money. If you were to ask me what's the number, it's probably another 50 or $100 million in the ground. How do we get there? Well, we need a better share price and better markets to get that kind of capital in the ground. But that's kind of, I think, where we need to get to move the needle on this scale of this project.
We haven't really talked a lot about or any about the other projects really, but talk to me maybe just as a whole about all the other projects that you're involved with and how you look at them specifically, because I'm thinking, can you use them as a source of financing? I mean, is there anything creatively to be done with options or other JVs or something that, just like you did with Ivanhoe, gets money spent on these projects, leaves you with value that you can then maybe realize, spend in BC and get that vision going quicker for what you want to make out of it?
Yeah, that's a good point, and we are looking at opportunities to, I mean, we'll call it monetization, and we're trying to monetize our non-core assets, which includes Hog Heaven, which we are getting some cash. I think there's still another $2 million cash to come to that, and they have to spend, probably another 25 million to get to 75%.
When are you getting that cash, by the way? What's the deadline on the 2 million?
It's a spring, it's an annual payment. So we have in the spring, we'll get another $1 million US, and then in 2026, we'll get another, potentially, I mean, it's an option, another $1 million US in 2026.
So in 2025, in the spring, you're getting another million
US, and then 2026, another $1 million US.
Okay, so like 9 months from now ish.
Yeah.
Okay, good. Yeah, well, that's going to help with G&A. That's what I'm asking.
Yeah, exactly right. And then obviously we're looking to do similar or other structures, however they may manifest themselves, on our Atlan project, which is a large-scale gold claim group in BC. And then the Langus, there's actually two mines, Langus and Hudson Bay, or two old past-producing silver mines in the cobalt camp of Ontario, which we've generated actually some pretty impressive silver numbers there. I think that's with silver starting to also gain market attention and eyeballs. There's some, we'll say, tire kickers on that we'll look to try and monetize it as well.
I'm thinking what that might look like specifically, or what you have to do to get them to monetize. Like, are those projects monetizable, if you will, at this stage? Realistically, again speaking, I suppose everything is monetizable theoretically, but realistically speaking, can you get a deal on them tomorrow?
Well, I don't know about tomorrow, but I would say yes, there's certainly deals to be had, and we've got a certain amount of capital we've invested and spent on them to date. So, we're trying to realize some value there. We're not just going to give them away. So we want to see some value there for our shareholders, the money that we spent on them. So I think the short answer is yes, there's an opportunity to do something on it, and we continue to engage with potential partners on that. So it's an active process that we're doing just internally here.
What else is coming out of some of these projects? I mean, Ivanhoe is constantly doing stuff over there. I suppose any news expected over the summer?
Yeah, I mean, they're actively drilling there, and just to recap, they are looking for a copper porphyry system. It looks like it's a large, quite deep system. The mineralization that they've encountered to date has been this high sulfidation copper, gold, silver mineralization. So they have yet to actually tap into the porphyry. But I think, or I hope at least this year, this is the year for them to get a hole into, they need to get one hole into the porphyry, and I think then it'll be sort of game on, and they'll go from one drill to many drills on that, and that's something that I think is also, it's a bit of a value driver for Brixton. We haven't seen any value from that asset, but I think that could come as well, and that could be an opportunity to monetize that even further. Potentially selling our interest in that, or down the road, I guess. If we didn't fund any more on the project, we would end up with a 2% royalty on that, and they can buy one for $8 million. So that's a long term, long way down the road, but I think there's an opportunity to potentially monetize our interest in that asset should they make that significant copper discovery.
And then the other projects, they're all in good standing. You don't have any large obligations or anything that you have to do, or First Nation consultations or anything that could slow them down?
No, the Langus one in Ontario is actually quite a low holding cost. We've spent a fair amount of dollars to date, and we have some patents there, so it's literally less than $10,000 a year of holding costs. The BC Atlan Goldfields project is probably in the neighborhood of $200,000 or $300,000 worth of work that's required to maintain the claims in good standing.
Okay, good. What else? I'm trying to scroll through some of the older news releases and look at your website here and there, just to make sure I'm not missing too many things. Well, there's a lot to talk about always, so I'm definitely missing something. But what else? What else did you come here hoping to talk about that I'm failing to bring up?
I don't know. I'll ask Michael if he has anything that we missed.
Not that I can think of. I think we covered it pretty much, quite extensively.
One thing that I would add is just on the liquidity side. I mean, for the size of the company, I just looked this morning. Brixton traded over 85 million shares this year to date. So given the size of the company, it does actually trade quite well. So that's, I think, an opportunity. I think this year, just to recap, for this year, we've got a fully funded program that we're drilling for new copper porphyry discoveries this year. We've got, as we talked about, Ivanhoe Electric operating the Hog Heaven project, also looking for an exciting new copper discovery, and potentially monetizing some of our non-core assets. So I think there's a couple good catalysts that could come out of this year from Brixton. And given that we're trading at 9 cents Canadian dollars, which I can't believe, but that's where we're at, and I think it's a unique opportunity to play in the copper and gold space.
Yeah, I thought I saw your right eye twitching when you said 9 cents, like you almost couldn't get it over your mouth, but it's good. Okay, Gary. Thank you for doing this. I appreciate it. There's a lot more to talk about. Maybe we can do a follow-up in the future. I suppose I have a couple of more questions here, but there's really only so much time that I understand you can give me. I am appreciative of your time, so thank you for investing your time. I mean, I'm gonna let you drop off now, as I will be I'll be staying in Canada, but I'm going to be looking at a historic gold camp that is currently being reborn, if you will, and potentially consolidated by Northern Superior. This company is listed as SUP, so SUP, on the Ventures Exchange in Canada, where an average of about 135,000 shares trade each day, with a 52-week high of 70 cents and a 52-week low of 28 cents. With a market cap of $92 million and about 165 million shares outstanding today, this is a 56-cent stock. There are 1.7 million warrants and 11.7 million options, with some RSUs on top, leaving the number of fully diluted shares at about 180 million, rounding up here. and with about a quarter of the company being in the hands of insiders. So this is a 25% insider ownership company with a couple of other names on here that you might recognize also being in the share registry. I believe Michael Gentile is the largest shareholder or individual shareholder of the company who actually brought this company to my attention. So shout out to Michael. Michael, if you're listening. The last financial statement, which is dated March 31st, shows me $2.6 million in current assets, most of which $1.6 million to be specific in actual cash, with a small amount of marketable securities and a decent chunk of prepaid expenses on top of that. I don't see any long-term debt or any major liabilities to be talked about that are out of the ordinary. I do see about $650,000 worth of account payables and accrued liabilities on here, though. That same financial statement from March also tells me that on average, over the last reported 3 months, Northern recorded about $170,000 a month in administrative expenses. That is excluding share-based compensation, with management fees, consulting, salaries, and stuff like that making up the majority of what I call the bureaucracy spent. Whereas, given the duration of the exploration season in Quebec, no significant expenses were recorded for exploration and evaluation over that 3-month period. So if I were to make the administration to exploration ratio right now, that wouldn't be all too fair, but that would be around almost 90% in administrative costs. But the whole financial situation of the company will be different for the current quarter and for the next quarter as well, because there is actually exploration going to be happening. I'll tell you more about that here in a minute. But also there was an $8 million financing recently closed, as well as a new exploration strategy has been announced, which again, I'll talk more about in a second. But of course, first, I need you to understand that this financial statement is nothing more but a snapshot in time. In this case, it's specifically at the end of March of this year, and it only covers 3 months of time. So please do head over to the company's website as well as setterplus.ca and look at older financials and filings to figure out how this company actually functions by yourself to make sure you're getting the full picture. Talking about pictures, Northern Superior is basically trying to permanently alter the Chibougamau picture by consolidating as much of the district as possible and as it makes sense. And this is a central Quebec gold district, by the way, this Chibougamau district that might be known to many of you, first of all, because I've interviewed many of the companies active in the region. I have personal interest in one of those, and also because it's just a decently high grade. I call it a gold copper district, but it really is that. So it's kind of split between a copper focused part of the district and a gold focused part of the district. But it's also one of the best jurisdictions in Canada, of course, that being Quebec. Northern has 4 projects here in the district, all relatively close to each other, but none of them adjacent to each other, which is a point worth touching upon later in the conversation as well. But the way these assets were brought together or added to the portfolio here, as far as I understand it, was with a single central mill, so kind of a hub and spoke model in mind for the company. Again, something we'll cover later on. Most of these assets are also in the vicinity of Nelligan. Nelligan was called Discovery of the Year 5 years ago in 2019, and I can't believe I'm saying it's 5 years ago, because to me 2019 was 9 months ago. But the idea is for Northern to keep growing both their already existing discoveries through the drill bit, as well as potentially grow their footprint in the district through potentially, again, M&A. And also, again, that 20,000 meter drill program in the upcoming months, which will be a centerpiece of the discussion today. Very quickly, though, the 4 projects here are, first of all, Filbert. That's the centerpiece of the land holding. It's a joint venture of Northern. They hold 75% of it, and the Quebec government's investment arm owning the other 25%. A recent resource on the project showed about 280,000 ounces of contained gold at about 1.10 grams per ton in the indicated category, and about 1.7 million ounces of gold at the same grade in the inferred category, with preliminary met tests showing recoveries north of 95%. Lake Surprise, or Lac Surprise, is the property to the south from that, also about 2 kilometers away from Nelligan. That's IM Gold's project, Nelligan. There's no mineral resource on this one, but there is one coming soon, potentially next year, or we don't exactly know, but I'll be asking about that later on. Then we have Chevrier is the next of the 4 projects. That's the big land package to the north from Filbert. It's also a resource stage project with 260,000 ounces at 1.2 grams per ton grade in the indicated category, and 650,000 ounces at 1.3 grams in inferred. And then last but not least, to the north from all of this is where the Croteau project lies. This is another resource stage project with about 640,000 ounces at 1.7 grams per ton, based only at about 20,000 meters of drilling. So suggesting that the company believes there is more upside potential with this asset and all the other ones for that matter too, which again is why an extensive drill program is planned for this year. Now, Quebec is not the only thing Northern has exposure to. They also own 72% of a Spinco, which owns a couple of gold projects in Ontario. One of it is in Eastern Ontario. It's called October, and they own another one in I'd call it West Central Ontario. It's called TPK, which is close to multiple high-grade discoveries. But that's not necessarily going to be the focus of discussion today, although we will touch upon it. What will be the focus here today is, of course, the Chibougamau district. So maybe let's kick it off there, Simon, because this is consolidating the Chibougamau district is not necessarily a new idea. It's a rather logical one, in my opinion, too. You're also not the only company that supposedly is trying to do that. But so consolidating Chibougamau has been talked about and attempted before too. Why do you think it hasn't happened yet? Like, why do we not have one central operating gold camp there already?
It needed to happen, and we took the lead to make that happen. And thanks for having me on, Antonio.
Pleasure.
And thanks for the summary of the company. We'll touch on all of this. But yeah, this camp was definitely right for consolidation. But there's always a lot of different factors at play, right? M&A is a lot of heavy lifting. There's a lot of things to do, a lot of things to handle. And we were able to take the opportunity or take advantage, I should say, of the down cycle, what we can call the dark days of mining. So it made more sense. Companies were more willing to talk, obviously. But like you're saying, this camp was really is really ideally suited to wrap up and consolidate. If I take a step back a little bit, and I mean, Antonio, you may know all this better than me, but from the window I'm looking at, the camps that have been attracting a lot of attention in recent years. I always say there's Guyana, right? Guyana's been doing well, where you have G2 Gold, Reunion, Omai, Aris. So Guyana, you're looking at about 20 million ounces in total. Then you have Yukon. Well, in fact, you have two camps in Yukon, Central and West. But in Yukon, you've got Newmont, Western, White Gold. So that camp is larger. And then you also have Finland that has been acting well. Even in those dark days of mining, companies like Rupert performed extremely well in public markets. So in Finland, you have Agnico, you have Rupert, Orion that's there. So that camp together, you're looking at 10, 12 million ounces together, maybe. So the Chibougamau Gold Camp is really, really not that far behind. And not a lot more needs to be done to bring the Chibougamau Gold Camp to that same level. And I would also say that all of the deposits of the Chibougamau Gold Camp, the southern part of the Chibougamau camp, all these deposits that we've been consolidating are much closer to one another than in any of the other camps that I was mentioning. So yeah, it makes total sense to put a central mill and have all these deposits feed that same mill. So already, if you look at the camp of Chibougamau, already you're looking at about 10 million ounces. But we're going to be doing a lot of work now. Like you're saying, we're cashed up. We just did a big raise. And so is IAMGOLD getting to work in the area. And if you look at this camp, you go back about 3 years or so, there were 6 companies involved in all those assets. And obviously you can't do a joint venture, you can't do anything, you can't have a unified or design a unified operation. So that's why consolidation needed to happen. And now fast forward to today, you've got 2 companies involved in that camp. You've got IAMGOLD and you have Northern Superior. So just to touch base, I mean, you did mention all of these deposits. I'll review quickly as well. But I think it's important to realize that there's still an enormous amount of low-hanging fruit throughout the camp. And I'm a big believer that just with the work that IAMGOLD is doing right now, and with the work that we are about to start with Northern Superior, I would bet that within a year and a half, 2 years, that camp will be north of 15 million ounces. So if I would tell you that we made a discovery of a 15 million ounces gold deposit in Quebec, we would probably be on the front page of the Globe and Mail, right? Well, that's economically speaking, it's the same thing, because if you wrap it all together, you feed the same mill, right? So like you said, Nelligan, it was a discovery of the year in 2019. And recently, IAMGOLD acquired Vanstar, right? Which is further evidence that IAMGOLD is starting to turn its attention to that camp. I mean, obviously, IAMGOLD remains laser focused on Côté. This was a make or break moment for IAMGOLD, but boy, oh boy, it looks like they made it because the operation now is beating all expectations, and kudos to the team in place at IAMGOLD. But now they're starting to send indications that they're looking at the Chibougamau Gold Camp as their next stop for growth. So recently they acquired Vanstar. So Vanstar is the company that actually discovered the Nelligan deposit. And Nelligan was a 75-25 JV between IAMGOLD and Vanstar, and IAMGOLD acquired Vanstar. So that speaks volume to the fact that they're turning their attention. And Nelligan is just shy of 6 million ounces now, at about 0.85 gram a ton. And I mean, every geologist that looks at this tells me the same thing. There's still an enormous amount of growth potential there. And I'll say this: when they went from last year, they went from 3.5 million ounces to 5.5 million ounces. IAMGOLD did press release that. That was based on only 20,000 meters of drilling. So it really speaks to the fact that these deposits in that camp have a very good continuity. So as you keep drilling, you keep adding ounces. And in this business, I much prefer to build ounces than building mines. It tends to be much more rewarding equity-wise. So Nelligan is just shy of 6 million ounces at 0.85. Our primary and main target at the moment for work is Philibert, as you mentioned. Philibert is only 9 kilometers away from Nelligan. So Philibert, that's us, right? So Philibert is just shy of 2 million ounces right now at 1.1 gram a ton. And there's still a lot of low-hanging fruit, and I'll go through this of how we can continue to build ounces at Philibert, and that's going to be the focus of the next 2 drilling campaigns for Philibert. But one thing that I really like to point out is the grade of Philibert, right? So you've got Nelligan and Philibert, and well, before I go down that path, Nelligan and Philibert are only 9 kilometers apart, right? So if you think of a mill in between, then that mill would be about 4.5 kilometers of trucking distance between those 2 deposits. Well, 4.5 kilometer is basically the pit size of Nelligan, and it's basically the pit size of Philibert. So it really puts things into perspective that it would make a lot of sense to put it all together. I mean, can Philibert grow big enough to be its own standalone project? Absolutely, I think it can. But I think it makes even more sense for at some point finding a way to put all of it together. So back to the grade now. Philibert is 1.1 gram a ton versus Nelligan at 0.85. So that doesn't impress my mom, but it's 25% more gold per ton that you're going to mine and process. So that's a significant difference, actually, because if you start by mining Philibert in a conceptual operation, then you're going to lower your payback period significantly by doing that. And payback period is typically the main thing that is being looked at to decide which project becomes a mine and which doesn't. But there's more to that. Because Philibert, the grade that I'm talking about, that is Philibert and Nelligan actually have the same cutoff grade in the resource calculation. But Philibert, if you look at it with a 0.5% cutoff instead of 0.35, you will lose only 10% of the ounces, yet the grade of Philibert will become 50% higher than Nelligan. So this seems to really indicate that a combined operation or starting by mining Philibert will significantly lower the payback period of the camp as a whole. So that's why Philibert is going to be the focus of our next 2 drilling program. You mentioned also we have Lac Surprise. Lac Surprise is really the extension, the western extension of Nelligan. Lac Surprise adds about 1.4 kilometer of mineralization to Nelligan. So that, I mean, obviously Lac Surprise is smaller than Nelligan. It's really just the extension, but every single ounce has tremendous value, right? And to grow the resource of Lac Surprise, we would actually now need to drill on the land owned by IAMGOLD. That's how close things are. So that even though this stage is smaller, has quite a bit of value as well in the context of Nelligan. Then that camp also has Monster Lake, which is further to the north. That's owned by IAMGOLD. But that trucks down very, very well. So if you're thinking of a mill between Nelligan and Philibert, you can truck down the ore from Monster Lake, because you're looking at about 12 grams a ton, right? So then you can afford to truck that down easily. Then you have Chevrier that Northern Superior has a bit to the northeast. We'll have about 1 million ounces there at about 1.2, 1.3. But it's a huge system. So that provides a lot of blue sky. And so does Croteau. Like you're saying, we have about 640,000 ounces there. But that also is a big system. And I also point out that last year we had a new discovery at Croteau, a new high-grade discovery to the west that will be certainly very interesting to chase. So we've done a lot of the work to put the camp together because big companies don't do that, right? I mean, big companies don't deal with 4 or 5 junior mining companies to get them together. There's a need for a company like us that takes things that advances the work, because I'm a big believer that the M&A that you started to see in the gold space will absolutely continue. I think gold will keep going higher, and when the real rates start going down, I think the equity are going to start to play catch up. The big companies are printing a much better cash flow now. Their margins are starting to expand, but they're running out of reserve. Generally speaking, the large companies don't have a lot of reserves. So that is absolute, perfect situation to see M&A. And when the large company is looking to do M&A to replenish reserve, it needs to move the needle, right? I mean, it'll go from the board. The board will make the decision. We need to replenish reserves through M&A. They don't want to turn to their VPX and be told, yeah, we need to buy 7 small companies. That's not how it works. It needs to be things that move the needle. So we've started to put ourselves in that category, and by consolidating the camp, we are turning this camp now into something that is viable, that ultimately the gold can come out of the ground. So by doing that, we are increasing the value of all of these ounces in the sector. And there was actually a piece of research published just a few days ago from National Bank that discusses the assets of IAMGOLD in that camp, namely Nelligan and Monster Lake. And they were putting a pretty big value on these ounces. National Bank was valuing these ounces at about $100 an ounce, which is not uncommon. It's not a stretch. I mean, when you see M&A in the Val d'Or area, that's, you know, it's not uncommon to see things happen at about $100 an ounce. Well, IAMGOLD, like I said, acquired Vanstar not too long ago. They paid about $40 per ounce in the ground for the acquisition of Vanstar, which again was the JV partner for Nelligan. Northern Superior is currently valued at about $20 per ounce in the ground. If you readjust for the shares that we own of our Spinco company that you mentioned earlier, being ongoing. And we can keep adding ounces at a much cheaper price, right? So the last drilling program we ran was linking two zones, and we actually added ounces at about $3 per ounce in the ground. And we feel pretty comfortable that with the money we have on the balance sheet now, we can continue to add ounces probably at less than $10 an ounce. So, you know, we dilute at we dilute at $25 per ounce in the ground in order to find ounces at 10, while IAMGOLD bought Vanstar at $40 per ounce in the ground, and National Bank values these ounces at about $100 per ounce in the ground. So it is very, very accretive work that we're about to do here.
Is that how you want to do it, though? Is that how you want to grow from here on? And like you stop acquiring assets, you just grow through the drill bit moving forward, or is M&A also going to be part of that strategy?
I think M&A will always be part of the strategy. There's someone out there saying that we're either the hunter or they're hunted. I absolutely agree with that. I mean, to me, mining is about M&A, and there's so much value to put this camp together that you can trust, you know, the mining industry that it's going to happen. So I don't know how, when, if, you know, all of that is going to happen, but for sure, M&A will always be part of what we're doing, either as a hunted or as a hunter. But now we've made quite a bit of acquisitions, right, with the Chevrier and especially with Philibert. So now we have a lot of ounces that we can drill instead of acquire. Especially Philibert has quite a bit of low-hanging fruit to get.
Is that how you're supposed to pronounce it, Philibert? I thought you were supposed to call it Philibert.
It depends where you're sitting in the world. Yeah, Philibert. Philibert is the Quebec pronunciation.
Good.
But I don't want to make your life too hard here.
I was exercising in front of a mirror for at least 40 minutes before recording this to say all these names in my best French accent. Jokes aside, does the involvement of some of your, and like, where do you grow from here is what I'm thinking, and following that kind of train of thought, I'm thinking, does the involvement of some of your directors, including, well, specifically Victor Cantori, who I interviewed recently as well, him getting on board on other companies like Abitibi Metals, for example, to name drop one, does that have anything to do with that strategy of combining smaller companies and making a more attractive acquisition target?
I mean, I've been working with Victor on this for quite some time. Victor and I acquired, actually, to give you put things in perspective a little bit, or not in perspective, but a bit of a historical color. Victor and I started Royal Fox together. That's right, during COVID. That was on the back of the Nelligan being the discovery of the year. We saw an opportunity in the Philibert project. So we started the Royal Fox together with the ambition to consolidate the whole camp. And we thought Philibert was the best way to get going. The Philibert project was in the hands, as you mentioned earlier, of SOCAM, which is part of the Quebec government. So we started Royal Fox that way, only to realize that my friend Michael Gentile had the exact same vision with Northern Superior. So both of us had an idea to consolidate the whole camp. wouldn't make much sense to do it separately, right? So at some point, Michael and I had coffee, and I swear there was still steam coming out of that coffee, and we had agreed to merge both companies. So this is how Victor and I ended up at the helm of Northern Superior. And yes, Victor is someone that knows the province inside out. He knows every project, and he has a magic touch to end up being involved with the good one. As you mentioned, WTB Metals is something that I really like as well. And also, like you said, we had Michael Gentili, who is involved, which needs no new introduction. And we also have, for example, well, not for example, but we also have Eric Desaulniers that just recently joined the board as well. I mean, what Eric did at Nouveau Monde Graphite is nothing short of spectacular. I'm sorry, but kudos to him. And he was able to do things that no one else in the graphite industry have been able to do. His strategic alliances with GM and Panasonic and all that. But Nouveau Monde now is really part of the whole Quebec strategy of electrification and become a leader in battery materials and battery manufacturing and all that. So Eric now has developed spectacular relationships at all levels of the government in Quebec. And actually, fun fact, Eric Desaulniers, geophysicist, before he found his graphite deposit, he was actually trying to acquire Fieldberg. So then he found the graphite deposit, and his life turned, and he started to build his graphite company, and the rest is history. But he always kept an eye on Fieldberg, and when Victor and I started Royal Fox, that's when he told us that. So he knows the camp very well, and absolutely understand the potential of the emergence of that camp by consolidating it. So Eric, obviously we are building ounces right now. We're not close to the development phase, but at some point, we will evolve there. So to have Eric involved in the early days, I think it was the right thing to do. So we got a lot of technical depth as well, right? Without going through everybody that we have in the team, we have very, very strong technical depth, which frankly allows us to punch above our weight class there.
That gives me a better idea kind of where and how you want to take it there potentially. But there remains one main thing, and that's financing, of course. You have a decently large goal here that you cannot achieve it without not only enough financing, but financed by the right people as well as under the right conditions. So how do you approach financing going forward as a whole? Like what's the larger thinking behind approaching financing, and not necessarily the next one, but the next 5 financings that you have to do?
Yeah, so I mean, this business comes down to 2 things. First, find the money. Second, find the gold, right? So we're very good to raise capital on the right term. Obviously, the market is a tiny bit better now. The last financing we did was led by Cormark Securities, was entirely institutional. All of the investors were institutional, to the exception of $1 million that came from the insiders of the company. So we did 8 million with Cormark. Also, we never, or I would never say never, but we really stay away from flow through shares because usually that ends up putting pressure on your stock price. But what we do is flow through charity swaps. Which allows you to take advantage of the tax structure to lower your dilution, right? But yet there are actual buyers and long-term investors that end up shareholder of those shares. So that's a most efficient way. So that's more recently, but even before that, I mean, in early 2023, when absolutely no one could get funded in the space, we still raised $5 million, all hard, market price, no warrants. That's another thing I like to stay away from, our warrants, because people like to buy them, but ultimately it puts a cap on your share price. People don't like to see it unless they're all, owned by insiders. That's a different dynamic. But I also like to stay away from warrants. So, we have a good network. We have a very good track record. So we've been very good at raising capital, and I mean that's not going to change.
It's the idea was also, as far as I understood it, for you not to have to raise too much capital too quickly, which is why you intended to do the spin outs. But then you still had to raise capital because a spin out was not a direct monetization of those assets. Is there a plan for direct monetization there? Because I mean, as far as I understand it, after this drill campaign, the money they have right now is going to start finishing up, and so you're going to have, or drying up, and you're going to have to go back to the market. So I suppose too many things going on. But is it, do you monetize TPK somehow, or do you go back to the market at the end of the year?
Neither. So first, with the money we raise now, we don't need to come to the market at the end of the year. That's much further off. I mean, with the amount that we raised, we can run our next 2 drilling campaigns this summer and the winter, which will also include a resource update at the very least at Philibert, which is going up matters the most right now. And with the hard money that we have, I mean, we can cover our SG&A for probably 2 or 3 years quite easily. So there's no need to come back to the market that quick at all. In regards of monetizing TPK, the company is a new listing, right? We own 72% of it. So, I mean, if someone is interested in buying 10% of the company, they will probably want to put the money into On Gold so that the money can go into the ground and advance the company, right? The company is too young. The listing is too new. The liquidity is not sufficient for Northern Superior to distribute those shares to the shareholder. That ultimately can happen, but not in the short term at all, right? Eventually, On Gold will progress, will be more mature. We'll hopefully make some big discovery at TPK, and let's talk about that as well. And grow. I mean, the strategy for On Gold, which is our spin-off company, is not to stop at TPK. We have a team in place to really expand throughout Northern Ontario. But at some point, that company is going to be more mature, more liquid, and there could be a point in time where we can distribute those shares.
What does that mean, though? More mature? Is it just liquidity in the stock or discovery? Like, what do you mean specifically?
Liquidity.
Okay.
So there's plenty of examples out there. I have one in mind that I'm not going to mention, but they did a spin-off. They distributed all of the shares to the shareholders. The liquidity was a new listing. The liquidity is not there to absorb that stock coming out. And that specific example I have in mind, the stock went down 97%. 97%.
Yeah.
So this is not something we want to do. Absolutely not, right? Because then what? We're going to have our On Gold company do its next financing 97% lower price? No, right? So, but the idea and why we did spin it out is simply that when you are in this business, you can't spread yourself too thin, right? For a company our size, we can't, consolidate the Chibougamau Gold Camp, drill aggressively in Chibougamau, drill aggressively in Northern Ontario. You end up raising too much money, diluting your shareholders too much, and you also lose focus, which is important. So the core strategy of Northern Superior had become the Chibougamau Gold Camp. But TPK, which was our main asset in Ontario, I mean, it is, not say famous, but it is a quasi-famous project. I mean, there's really a legion of followers. People are extremely passionate about this project because it could be an absolute world-class discovery. So we needed to put it into a company with its own capital, its own management team, its own approach, in order to be able to unlock the value of that project. And that's what we did. So when we launched On Gold, we did it with $5.2 million of hard cash in it. So the company is a very solid footing financially. And we put a completely different team in charge. So Northern Ontario, I mean, TPK is not different from anything else in Northern Ontario. It really always comes down to local communities, social acceptability, relationship with First Nations, and Northern Ontario is not easy when it comes to that. I mean, obviously, the Ring of Fire comes to mind. So, and frankly, you know, I looked at this Quebec versus Ontario, and there's a big difference between the First Nations, for example, that are pro-development in Quebec versus the First Nations in Ontario that are pro-development. The bands in Quebec, the First Nations in Quebec seem to benefit, you know, nicely. I mean, I can think of the Cree Nation that is, you know, very well off. I mean, they have a presence downtown Montreal. They have an airline that's called Air Quebec. And you know, I can think of a First Nation that is our partner for TPK that can't have drinking water. I mean, can we find a middle ground somewhere, right? So the idea here is really, and we really mean what we say when it comes to this, is to take a different, and by that I mean much more inclusive approach to Northern Ontario. And what I mean by that is to make the local communities and the First Nations actual partners into this, so that they can actually benefit from the development that they would support. So to that effect, if you look at who we have put CEO of On Gold, his name is Kyle Stanfield. So Kyle is the person who permitted Musselwhite. It is Kyle who permitted Rainy River. Interestingly enough, Rainy River and TPK have relatively the same geology. That's you know, the discovery was made the same way. And Kyle has not only good relationship with you know, the First Nations and the local communities that we're making partners, but a know-how and an understanding of their needs and how to work together. And you know, we're still at the stage where we are designing this partnership, but we really want to do things right, and good things sometimes take time. We are pretty confident that we can drill in the months ahead. It takes a few more months. I don't mind. This asset is too good not to take the right approach. We also brought in as chairman Mr. Jung Kim Bell, who had a very colorful career. Actually, he even has his own Wikipedia page. So if you allow me, he's actually was born in South Shore, Montreal, so Indigenous himself. He started in the arts. He was a conductor, musical conductor, ended up musical conductor on Broadway, ended up touring the world with rock bands, like the Bee Gees come to mind. Then he went to the professional world, or the business world, I should say, where he was handling social acceptability and First Nation matters for companies like Hatch and Brookfield. He also sits on countless high-profile boards like the Canadian Broadcasting Corporation. He did a lot of philanthropy as well, raised a lot of money to send something like 10 or 20,000 Indigenous youth to college. So very well accomplished, and you know, someone like him can help open direct, you know, relationships throughout the province in Northern Ontario, where we in the growth. So the idea here, just to wrap up on this, is that TPK, we see TPK really as a starting point for on gold. TPK, if we make a discovery there, that would be major. I mean, it is the largest till anomaly or gold in till anomaly in North America, potentially the world, but definitely the largest in North America. Our team believe that they have identified the source of that. And I mean, one drill hole that caught a lot of attention was 25 grams over 13 meters. There's also a famous boulder that was found in the area. Usually I don't get excited with soil samples and boulders. They don't mean much more often than not, but this one, 727 gram gold. So I know you probably thought I was going to say silver, but no, 727 gram per ton of gold. It's a project that has a lot of people fascinated. So it's worth doing the right approach.
I see that. I feel like we can talk for hours here, Simon, but I see that our time is kind of pushing. I want to run through a couple of more things that are happening this year. You're and zoom in on specifically exactly what you're going to be drilling over at Philibert and what you're looking for. Is it mostly based on geophysics? You're looking to what are you looking for? Grade, or you're looking for tonnage? Both? What is this drill program going to look like?
To making larger mostly, right? So yeah, so we're looking at doing about 20,000 meters just on Philibert alone. And by the way, IAMGOLD, if you look in their last MD&A, they're going to be drilling something like 17,000 meters on Nelligan, Monster Lake, and Anik, which is on the same trend as Philibert. But we're going to be doing about 20,000 meters at Philibert alone. And we have still a lot of low-hanging fruit. And what I mean by that is the 2 million ounces that we have already is based only on 3 kilometers, right? But the geophysics indicates that this continues for another 2 kilometers on each side. So there's another 4 kilometers in total. But geophysics doesn't say everything, right? But we do have historical drilling data that shows that, yeah, there's gold there as well. We were thinking that we can just drill it out and continue to add ounces. I mean, there's something like 18 meters at 2 gram a ton historical that was drilled in that geophysics. We're also look to connect mineralization, which is something we did last winter. We had the east and west section that we drilled out, and indeed it was just a lack of data because the gap was mineralized. So same thing going forward. If you look at our pit shells in the resource, you'll see that there's a smaller pit just southeast. So the idea is to connect that mineralization, so that whole gap is about 1,500 meters. So that can add an enormous amount of size to
You're specifically also focusing on. I was reading through some of these through your news release announcing that you're specifically focusing on the hanging wall trend. Then I suppose there are specific reasons for that. Is it lithological, structural reasons? Like what's driving that decision?
It is absolutely geological. I mean, that is just the next step that makes sense. It's all about adding ounces that we feel confident we have, right?
Yeah, but what is it specifically? Is it lithological, as in, is it the type of stone? I know you're working with fractionated gabbro, if I'm not mistaken, or are you chasing the structural controls on that side of the packet, or like what are you doing specifically?
I need to put my geologist with me next time we talk, not to lead you down the wrong path.
Good. I'll take you up on that offer. We should do that, actually, a geology deep dive. How deep do you want to drill this year?
It's not that deep, right? I mean, our deepest hole, I think, is around 300 meters. But that's another thing, is that we're all open at depth pretty much throughout Philibert. I mean, Philibert originally, the first economic study that was on it Then we go back years and years, 1991. But that was originally an underground deposit. The first resource that was there had I can't remember. It was not a huge size, but the grade was 5 or 6 grams a ton as an underground deposit. That was before Nelligan was discovered. So back then they were looking at Nelligan a bit like Monster Lake. So they were looking at the higher grade, thinking they were going to have to truck the ore over a long distance. But doing that, they drilled through a big open pit, which is where we came in to transform this project into an open pit operation, because now the camp has transformed itself since the discovery of Nelligan.
Okay, so you don't necessarily want to do anything deeper than that. Like, you don't want to go 500 meters, or there's no need.
No, there is 100%. We can add ounces. So if you look at a cross section that we have, you'll see that we have a deeper part of the pit to the west, but every single other small pit within the big one, they're all open at depth.
Okay.
So we're open the east and the west and at depth as well.
Do you think grade is going to be picking up at depth, and what's the internal geological thesis saying on this? Like, how far does it go? Like, is this a kilometer thing we're talking about, or is it 600 meters?
Yeah, no, I don't think we would go that deep, at least not in the foreseeable future. But yeah, the grade should go, picks up as we go deeper.
Okay, that makes sense. Good. What about the in-pit resource optimization? Is kind of what you made me think about it from a strip ratio perspective. Is that in the plans for this year?
Yeah, so I mean, so far the strip ratios are not disclosed on Nelligan and Philibert. It is a bit on. It is something we need to lower a little bit this year with infill drilling. But after the work that we're going to do in the next 2 drilling campaigns, I believe our strip ratio could end up in the same vicinity as the strip ratio of Nelligan. So that would make it very comparable assets.
Right, and all that work is permitted. And I mean, the drilling, you want to do deep IP, I believe, too. But everyone in the community is happy with you doing that. You don't have to get any other paperwork done before it.
I mean, you need to drill to get permitting to drill every time. I mean, that's but there's never any issues to be claiming. This is really a mining area, okay, right? And we have very strong local support by all communities. I mean, obviously, we need to keep everybody informed and up to date, and again, treat them as partners and use their services as well, right? Of all local communities. But this is not an area where permitting is an issue. That's for sure.
Yeah, nope, you're absolutely right in that part. Based on what I know as well, you're going to be re-assing core this year as well. Is that the first or the next news release that we're going to hear about from you, or like what is the next news release going to be about?
No, so yeah, there's always a lot of re-assaying, right? Because like again, the government of Quebec had drilled a lot over the years this deposit, but we have a lot of core that's on the shelf that have never been sent to the lab. So we've done that in previous years. We'll continue to do that. It's obviously a very cheap way to add ounces when we don't need to drill the hole and just take the hole from the shelf. Is that going to be our next press release? That I don't think so. We're beefing up the team right now. So that should probably be more like the next press release. But yeah, it's a very cheap way for us to add ounces, optimize the deposit by reassaying historical core, and then we should be drilling, in the weeks ahead as well. So we're going to be quite active.
Right. Well, Simon, I'm going to take you up on that offer. I hope I'm going to take you up on that offer to have your geo with you next time, and we do a deep dive on the rocks here. A couple more questions to go through as well. on the corporate side, but I see the time is pushing for you as well as for me because I have someone else waiting in the room. So I'll let you drop off now. Thank you so much for investing your time in me, though. I greatly appreciate it, and hopefully speak soon. And as Gary's dropping off, I am going to let someone else in the room, for which I'm actually going to have to be traveling down south, not too far south, though. I'm only going to Arizona to look at a potential bulk tonnage heap leach gold operation, and but also Canada. What's going to make sense here in a second, but I'm going to hearing about these things from Dr. Shane Ebert, the president of Canex Metals. The company is listed as Canex, so that'd be CANX on the Ventures Exchange in Canada, where an average of just about 20,000 shares trade each day, with a 52-week high of 8 cents and a 52-week low of 3 cents. With a market cap of $4 million and about 115 million shares outstanding today, this is a 3.5-cent stock. There are no warrants, and there are only about 5 million options, leaving the number of fully diluted shares at about 120 million. Management here owns about 10% of the company. 35.7% of it is owned by high net worth individuals, as estimated by the company itself. 7.3% is owned by institutions, and 6% is owned by Altius Minerals, leaving only about a third of the company in the hands of retail investors. The last financial statement, which is dated March 31st, shows me $450,000 in current assets, most of which 380, no, well, it's a little bit more than that, but 380,000 to be specific, in actual cash and cash equivalents. There's also some prepaid expenses, account receivables, and short-term investments on top of that. I don't see any major debts, and account payables show up only about $35,000 in March, and this time it is actually just 35 and not 350. And that same financial statement from March also tells me that on average over the last reported 6 months, Canex recorded only about $25,000 a month in administrative expenses, whereas nothing major was recorded in terms of exploration expenses over that period. As the company's they're not actively drilling. They're mostly walking the bush in Arizona, but that might or might not change soon, which I hope to learn more about here from Shane in a couple of minutes. As always, though, I would like to remind everyone listening that the financial statement we're looking at is nothing more than a snapshot in time. In this case, it is specifically at the end of March of this year, and the finances will have changed by the time you're watching this. So please do head over to the company's website as well as sitterplus.ca and look at the numbers yourself and make sure you're getting the full picture. Numbers, of course, never tell the full picture. So a brief overview of the projects here is warranted. There are actually, as I mentioned, 2 projects that Canex now has exposure to, with an earn-in option agreement on the Louise property in BC being the newest addition here. This option just got approved by the exchange about a month and a half ago or something along those lines. And for Canex to earn 100% interest in this property, it's going to be basically a 5-year process. They have to issue $10,000 worth of shares now on approval. That's $25,000 worth of shares needing to be issued within a year from now, give or take. There's $50,000 worth of shares needing to be issued in 2026, $90,000 in 2027, $200,000 in 2028. And that is before March. And then before March of 2029, there's $400,000 worth of shares that need to be issued. Now, why Canex even wants to get its hands on this property is because historic drilling here has defined a mineralized zone that's about a kilometer long to about 200 meters wide and extending to 270 meters of depth. Now, this is West Central BC. It's close to our favorite, what I call porphyry town of Smithers, which must already be telling you that this is indeed a copper porphyry target. And those typically like resting at depth, specifically in that part of the world, which is also potentially why mineralization on here seems to be picking up at depth. And that is based on historic drilling that the company has or is looking into, which includes highlights of up to 0.4% copper and 0.4 grams per ton of gold, starting at a little over 50 meters of depth and going on for a little more than 150 meters, 158 meters to be specific. But the project has never really been explored at depth. So if you look at those grades, those would be your typical, and specifically that part of BC grades. Only the depth doesn't yet check out, which means that potentially these things, and again, potentially is a forward-looking statements here, but potentially they extend at depth. There's also a historic resource of almost 1 million ounces of gold in the inferred category with some gold and some copper as well. And then there's some stuff in the indicated category, but that's not really why the company's interested in this project. They think there's a lot of growth potential here. Again, there's no drilling happening right now at the property, but Canex is basically analyzing the results and thinking about how to tackle this project. And they're also planning a deep IP survey, hopefully this year, which is expected to cost about $350,000. And based on the financials that I just walked you through, that this is basically going to be an if, and it's going to be an if they can get financed, of course. So it is a little bit up in the air right now, but that will definitely be part or well, not, it's going to be the focus, one of the focuses of this conversation later on. And then when the weather gets too cold over in northern BC, we can look at Arizona, the Arizona project, which goes by the name of Gold Range, and it's located in Mojave country. This is a roughly 4 by 4 kilometers land position. There's 138 holes drilled on it to date with, there's multiple intercepts. So there's your typical sort of half a gram and intercepts that you'd see that part of Arizona coming back from it. And with the near surface bulk tonnage targets returning highlight intercepts in the range of 2.2 grams over 24 meters and so on. And there's also some even higher grade, though, narrower stuff of 10 grams, even 14 grams over about 1.5 meters in some instances. No drilling happening here right now either, though again, it is all financing dependent, as I pointed out, but the company did just complete a surface program, as I said, walking the bush to zone in on some new, potentially better exploration targets with some more news about this property expected later on this year. I'm not sure. We'll actually talk about that, Shane. But before we actually go into that, I had watched an interview of yours about 3 or so years ago. Your name, I believe, came up in a conversation with Michael Gentile as well, but you haven't been doing much of sort of public retail communication, if you will, and things have gone a little bit quiet, if I may say that. Why is that? What's happening?
Yeah. Hey, Antonio, it's great to be here. One of the reasons things have slowed down is because of the markets, because of the G&A. I mean, we were really trying to rationalize our G&A, keep things to a low level. We've done a few stints of marketing and we haven't got much response. We're really not in that type of market yet. And, in these markets, our cost of capital is so high, access to capital is quite low. So we're focusing on adding value to the properties, getting them ready for the next little upswing that we might see. As soon as we get a tailwind, we want to have everything ready to go with the drill, where we can really, really start to make a splash. And yeah, we've added a property in BC. I can get into the details as to why, but it's really when you want to reduce your spend, there's a lot you can do looking at projects, dusting off project lists, knowing what you're looking for. And just like there's opportunities for investment at these low levels, there's also opportunities to pick up quality assets at these low levels when everybody else is in the same boat. One of the advantages we have is our G&A can be turned down very low. So we've got enough cash to last a year and a half on the G&A side. If we want to actually spend money in the field, besides some of these low-cost programs we're doing and data analysis that we're doing at the moment, then we've got to raise a bit of capital. But we don't have a gun to our head. We've got some time and some runway in front of us.
I do want to talk about it as to the why behind your purchase there. And you are right. I mean, you've gotten your G&A to, as I mentioned, about $25,000 a month. That is, is that correct? What I read?
You'll see that come down significantly. There's accounting, there's rent. We share space and we share people. We don't have salaried people. Everybody in our management team is, they get paid for the hours they work. So things can get turned down quickly without having to devastate your team, right? We've all been in these positions before. And it's really how you have to operate junior companies in these types of cyclic markets. If you have a high G&A and high salaries, you're forced to liquidate people, and you need that continuity to build these. And I've been in the industry 30 years, and when it comes to timelines, it's one of the things that investors don't often understand. I'll give you an example. Our core management team at Canex, we're all involved in Tyler Resources in Mexico. And at the late 1990s, We went down there and we discovered a large porphyry system, but it didn't happen overnight. So for years, our team was operating very cost effectively, money in the ground, building the asset. But the market doesn't always appreciate that. Fast forward to 2008, we had a real asset. We monetized that asset when the industry was doing some M&A. So we sold the company for $1.60 a share. A lot of us got in at 5 cents a share. So for those of us that invested early and believed in the story, we made 32 times our investment. But it took 8 or 9 years to realize that. And I think a lot of these stories can take 5, 6, 7, 8 years to play out. And that's where you need to really focus on quality investors that understand and give you timelines. It's tough nowadays. There's a lot of people that watch the stock every week and, you know, they want near-term results. Markets don't always play out that way, despite the best intentions of management and others.
That's what I was mentioning this. I mean, I talk to a lot of executives, and a lot of them tell me, you know, the market is bad, we're going to lower our G&A. In your case, you've actually lowered it to 25,000, which is, well, it's notably low. You know, sometimes I talk to them and they'd be like, oh, we lowered it from 300 to 100,000, which is a significant drop in percentage, but still a significant burn. And if you're a $10 million company and you have a $1.2 million G&A, then that's 10% dilution a year just to keep the lights on. And that is kind of challenging. Now, at the same time, I also understand that if you want to retain your people to run this company and tell the story and figure out drill targets and whatnot, you got to pay them well to keep them. But in your case, you're saying you have no salaried personnel. How do you keep your people? How do you pay your own bills? I mean, you said you're involved in other stuff, but does that mean that your attention also gets divided? And how much attention really goes to Canex here?
Yeah, it does. When it comes to paying the bill, and personally, a lot of our team at Canex is fortunate to have been through a pretty nice, rewarding discovery to liquidation in the past. That certainly helps. When you're looking at the types of markets we're in and splitting time and sharing time, I mean, that's a great way when nobody's spending money and you have extra time to meet your personal requirements without putting all the onus on one company. Capital structure is so important here that you don't want to, like you say, you don't want to be spending 10% of your share structure every year just keeping the lights on and your company running. So the important part here with management to keep them involved is believe in your projects, align yourself with shareholders in that you actually own part of the company, and make sure that if you win, which is, I mean, my goal isn't to make money off the markets every year and retire at 55. I'm already past there. But, you know, I want to discover and hit the home runs. That's what motivates me. I'm happy to work for not a lot of compensation if I see that future in front of us. And you do have to be patient. Capital markets are semi-closed right now. It's hard to raise money, and that slows down your timelines. I think we'll get there. And the key is to have conviction in your projects. Do they have what it takes to get you to that next level? Is there real discovery potential? And discovery isn't always one drill hole. It can be 50 before people realize that, yeah, this has legs. There are some drill holes where there's no question, right? You get 400 meters of a couple of grams and the whole market is excited. We've been getting 60 meters of a gram, 24 meters, 2.2 grams, and building those zones out in Arizona, for example. We think it's a real discovery and we see real potential to build ounces that can be mined by open pits and heap leached, low cost type stuff. Yet it's taking longer in these markets to play out because our share price isn't appreciating with each hit, which allows you to really move forward and drill it out. So it takes longer to drill these out. But as you mentioned in your excellent intro, 138 holes in Arizona, we're really defining some real zones. Yet it's just taking longer to get there. And we think we have some of the best zones still to test. But I won't jump forward to that part.
We will get to that part for sure. And you're mentioning just a challenging situation of the financing market as a whole. And this actually brings me to I suppose one of the main points that I wanted to ask you when I first looked into this, but with this new property now in BC, the question would kind of be something along the lines of what's the corporate strategy behind it? And I mean, you have a slide actually well explaining part of the opportunity here. That's slide 7 in your presentation that I'm looking at. And I basically see a bunch of logos from the majors who do indeed have an involvement in the region. A lot of them, especially especially the copper hungry ones, which well, I suppose all of those really are copper hungry, but so what? I mean, the plan is to get one of them interested, do a JV, and they pay for drilling, earn in 75% on the asset level instead of doing equity level dilution. Or like, what's the corporate strategy here?
Yeah, so there's lots of reasons for bringing in different partners at different times, at different stages of a project. We've wanted to have 2 fundamental main projects for quite a while. So having a 1 asset company, there's always a bit of a risk if that thing loses a bit of luster, or if it doesn't meet your targeting threshold at some point, you need to have something ready to go to move forward. When times are slow and you're not spending much money, doing these desktop exercises and dusting off lists that you have of targets is something that I've been doing for quite a while now. And I've been involved in the porphyry space for 3 decades. My first job in exploration was exploring around the Huckleberry area for Noranda in like 1988. Love porphyries. I love copper gold porphyries, and we're seeing a ton of companies in BC looking for copper gold. So the target model really made sense to me. And as I dusted off my list, I happened to see a project that I've had my eye on, but never had a really good understanding of and never done a deep dive on the actual available data for the project. And that's the Luis project near Smithers. That's our copper gold porphyry target. It happened to be held by a person I know. Called him up, had a chat. He says, yeah, I'd love to have you come and look at this stuff. It hasn't been explored in 16 years. The last market crash in 2008, this thing basically never got reactivated, despite some pretty good solid results. But when I look at this, the reason for putting it together is, 1, the commodity. Copper gold is a great mixture to have in any deposit. Copper gold porphyries have scale, and all the majors are looking for it. So when you talk about how we fund it moving forward, we have optionality. If we can actually develop targets there, if we can't raise money in the markets, or it doesn't make sense for us to raise money ourselves, we potentially have a lot of majors out there looking for these things that might jump in. It's not always to a company's advantage to bring a major in, like maybe for an equity position, but as soon as they're partners in a property, there's some issues there as well. Their timelines and your timelines, their objectives and your objectives don't always align. So you always have to look at these things in terms of the opportunity, the conditions that you're in, and how to move it forward. But having that copper gold opportunity, and if we can get some good targets with some potential very low cost initial look at the bigger scale, bigger potential, we might have optionality to move it forward. So that's the thinking there. Great to have 2 properties to focus on.
I want to go deeper on that as well here in a second, but what I'm also wondering is, it's not. I was going to say you're getting the property for cheap. It's not cheap,
Yep.
but depending on what angle you look at it from, right? But there's a very low initial cost for you to get in. It's a shares deal. Why? Like, why is the vendor of this property giving it away this cheaply if it's that perspective?
Yeah, so part of that is the relationship I have with the vendor. We both have mutual respect. We've been in the industry a long time, and he understands that for him to really get value here, we have to look at it properly. And he's willing to back end load his compensation, and he has a royalty, which is important. So he's willing to forego some of the upfront compensation to help us in these times of challenging markets, right? We don't want to get into a deal where we're having to go to the market at 5 cents or less to fund big expenditure requirements. So he understands how the market works. We're looking for a low upfront deal, and as we add value, yeah, we can pay more down the road. So it's structured in both people's to both people's advantage, so to speak. He's going to get quality work, and he knows if he allows us the right amount of time, we're going to look at this very technically with geophysics, with putting all that data together, and giving it a really good shot. If there's something there, if that bigger prize is there, we should have a pretty good idea by the time we're done. And we won't be forced to do something that we don't want to do or rush it or abandon it because the markets don't allow us to move it forward at the timelines we would like to.
I want to talk about the geology as well as we move forward here, but just for a second, thinking about the main thing is that, well, and it's also right. I mean, for you to uncover that geology, you need money to go and drill this thing, right? After you've done deep IP and all these things. But what do you think is going to get the market excited enough that it gets your share price to a point where it's a workable market cap that you can raise money off of? Because where I'm coming from with that question, I'm sorry for continuing on here, but where I'm coming from with that question is that basically what gets market caps and share prices up right now seems to be just extraordinary drill results and nothing else. Even if you can come up with a great geophysical discovery, the market doesn't even seem to care to read the news release. So what do you think you can do right now in the current financial position to get the market cap and the share price to a more workable place?
Yeah, so that's the challenge. And what we're trying to do is set up both of our projects so that we're ready to go with high quality drill targets. And we might need a market tailwind before we can actually take the step and drill it. We'll see how things play out. But right now we can take that copper gold opportunity, and for fairly low cost, a few $100,000. I mean, even if the markets are essentially closed, we don't have problems raising money. It's that high cost of capital that we don't want to stomach, but we can stomach some of that if we need to. And we don't need to raise money right away. I'm not announcing that we're financing or anything like that. It's just to take this to the next step, we'll probably need a few $100,000. We'll do a geophysical survey, and then we'll have a good idea if the project should move forward or not. Does it meet our threshold? Are the targets real? Are they there? If there's a bigger porphyry, and what we think we have on the geology side is the upper part of a porphyry system that's faulted away. So we don't actually see, and the exploration never proceeded past the existing geophysics, and they never really drilled very far past existing mineralization. So we have a wide open scenario here to potentially image with geophysics the larger system. If it's there and the targets are there, I think that becomes a very compelling story for drill testing when markets are open and allow us to do so. So the geophysical survey itself might not solve all of our market conditions. Clearly, if we can take it to the next step and a discovery hole in a porphyry system has been very good for juniors. So looking a little further out, I mean, that has the potential to add significant value. And I'm not saying we're going to get there immediately with our near-term game plan, but we'll understand if that target is there or not, and if it's worth testing, and then trying to move that forward from there.
Is there a different way for you to finance any of that work, though? I'm thinking of something along the lines of I was closely following American Eagle since the moment, since it really started focusing on BC. So it was a $2 million market cap company at the time, not workable at all. But they got a $1 million loan, essentially, which they eventually ended up repaying back. And it turned out into a kind of a great win-win story for both parties. The part that gave them the money, but also for them, because they wouldn't have otherwise drilled that, big hole of almost, what was it, almost 1% copper or something along those lines, whatever, the hole that attracted the market's attention. So is there something creative for you out there that you can do outside of asset or equity level dilution?
Well, potentially. I mean, there's the JV route. There's partitioning ownership in the property. There's that type of stuff. But I think every deal has to be weighed on the merits of the deal and the conditions that you're in. If we had really good geophysical targets that came out of this, I think our options for funding drilling change and probably increase if we care to go that route. I'm always of the opinion that we're an exploration company. We want to take the risk and maximize the reward for success. But having said that, in difficult markets, there's a lot of companies out there looking, and you've got the targets and you've got the concept, and you can sell that concept. There's ways to move it forward outside of traditional equity financing.
Now you're getting me curious because you're being a little cryptic here.
Well,
but
I mean, that could be bringing in a major, that could be bringing in other companies, there's private companies, there's majors, there's lots of pools of capital out there that aren't traditional pools of capital that you can look at, but it's all speculation until you have one in front of you and a deal to
True.
choose
Yeah,
from.
I get it. And those are the forward-looking statements that we also mentioned, and like people listening should also be careful. You're talking about, I'm looking at some of these things here on your presentation, but you're mentioning the deep IP survey that you want to do, the geophysics. You're saying if we have really good geophysical targets, talk to me about the why behind you wanting to do that, and what exactly good geophysical targets would look like coming back from this deep IP that you want to do.
Yeah, for sure. So IP is sort of the gold standard for exploring porphyries with geophysics. There's lots of other methods that help you image alteration zones and stuff, but IP is what everybody uses. There hasn't been an IP survey done here in 16 or 17 years, and the survey that was done was very focused and shallow looking. So one of the key, just sort of low-hanging fruit opportunities here is to look at these porphyries in terms of depth, and they often occur in clusters. There's often multiple centers within a given district. So a simple IP survey, deep looking, you can look 6-7 kilometers sort of strike potential, and if you have no issues with near surface conductivity and a bunch of other technical stuff, a lot of these things will look down about a third of your line length. So we would design this to look about 1 kilometer deep and cover a big area. So we have this one quality deposit in the center, and now we want to look over a bigger box that covers the whole area. And if the IP chargeability and resistivity give us the same type of signature that we see over the known mineralized zone, we know there's pyrite halos and there's all sorts of things that happen in these systems. So you do have to interpret your results. But if we see the right targets and we actually find the bottom part of this that hasn't been faulted away, that's where the big prize is. It's not the 150 million tons of copper gold that we see right now. That is great. It tells us there's a real system. But where is the bigger part? Where's the main intrusive host? What are the wall rocks around that intrusive? Are there multiple centers? The IP should really help us interpret that. Real life can be messy and complex. The IP may be a little bit more difficult to interpret than just a big bullseye saying drill here. But looking at that data, I think we'll have a really good understanding. Is there targets of validity there, and what our next steps are? And it's easy to walk away with a few $100,000 invested. You test the target. If you don't like it, big part of our business is knowing when to walk away on any target. When does it not meet your criteria? When you're not happy with the results? But I love the risk reward scenario that this could be for a few $100,000. If we can image and find a real porphyry center with good copper gold grades, to me, that's a pretty exciting exploration story. And I'd love to move that forward.
Given that there's basically this copper, gold, silver, and moly in sort of different concentrations to different parts of this property, do you think you'll be able to explain where and why we see more moly versus more copper, for example, etc., based on this survey? Or could the presence of that much moly kind of throw off the potential benefits of this IP?
No, well, I don't think that's an issue. It's going to be mineralized where it is. Moly is part of the system where the copper and gold come in with. So, I mean, sometimes in these systems, well, you often get multiple vein events, and you'll get often a copper-rich event in your A veins, and then a moly-rich event in your B veins. Sometimes they're spatially a little bit separate, but they're all in the same general area. So, if we find the moly, and moly is often a little more central to your porphyry system, and copper can be a little more laterally extensive. But if we find one, we find the other. The problem in interpreting the chargeability comes with pyrite and interpreting some large pyrite halos that aren't mineralized in and around the mineralized zone. And if you got structural dislocation, it gets a bit more complicated than just looking at a single chargeability map or section and saying, this is your core. It could be, there could be some structural complexity, and there likely is. This part of British Columbia, there's a lot of structure, and you really have to try to get a handle on that. The great thing we have is we have a really good high quality data set of I think it's 58 drill holes already drilled. The guys did a great job. We've got a good handle on the structure already and what's chopping things up and what's not. That's going to really help us. So we can take that known and we can apply it to the unknown and come up with some better targeting models. It all helps. But you need more data to really come to those decisions about what mineral is causing this chargeability, what mineral alteration is causing this. It's a story that you build as you go.
That's, I suppose, pretty much why I'm asking this, because as far as I understand it, having disseminated mineralization within the monzonite here is important, but it could also be sort of a double-edged sword, if you will, because, well, again, I'm not a geo, so I might be missing the important points here, but it could be a double-edged sword from perspective of it being complex and it taking you longer for you to figure it out as to where you want to drill it and stuff like that. Is that the case? Am I seeing this correctly?
That's the nature of our business. That's exactly it. Sometimes I think SK Creek was found on the 103rd drill hole. They kept hitting smoke, kept finding stuff. So you can never really tell how many holes it's going to take to find it. But if we can get some good drill targets and we can put 3, 4, 5, 6 holes into those targets, I think we have a good shot at working that out. Ideally, we want to hit the home run right away. And if there's a system down there and you drill into it and you get the 1,000 meter of good mineralization, you're off to the races. Investors are going to win and you have the availability to raise capital to actually drill it out in a timely manner. But it's not always that easy. And if it was that easy, we wouldn't be looking for capital and we wouldn't be looking for resources worldwide. But we're still looking for resources, trying to find more copper deposits, more gold deposits. It's a process, and no one should take this as a magic bullet that we're all going to get rich. That's not how exploration works.
Unfortunately. But would that be the goal? Like, would the goal be to you see a geophysical target and you're like, okay, let's just go and do a kilometer hole right away? Like, you're not gonna do 300-meter holes or anything like that at first. You're going for the depths immediately.
Some depths, yeah. I don't think you want to drill 300-meter holes. You might not need to drill 1,000-meter holes, but it depends on what you get. If you're into mineralization, you let it run as far as you can if you like what you see. But you make those decisions as you move the project forward, but you got to drill it. These porphyry systems can be big and they can extend to significant depths, right? You can't just drill them to 300 meters. That happened a lot 20 years ago, 30 years ago. 700, 800, 900 meters is pretty common nowadays when you're drilling these systems.
That's true. Yeah, that's what we're seeing coming out of BC overall, I think. Would the strategy for you then be to, after that, and I assume that what we just, and I understand that what we just talked about was mostly based on assumptions and it was forward-looking statements. So what I'm about to ask you is way forward-looking, but would the strategy then be to work toward an updated or verified resource immediately after drilling, or do you think it'll be at least a couple of years of just drilling outside of the historic resource?
Yeah, it's hard to give a firm answer on that until you actually see what you hit, what's coming in and the potential value drivers of your bigger system. If you're into new zones that are clearly going to drive value, you have to drill those out before you prematurely try to come out with a resource. So you're probably understating your value. So I mean, ideally, you want to get these things drilled out, understand the value, get to the resource, and then maybe get to preliminary economics. But again, it's all results and market and cost of capital driven. But I mean, that's sort of the end game here, is to figure out what's there and figure out how to best to monetize it.
Right. Okay. What about in terms of permits? You doing this IP survey, you can just go ahead and do it once, and if you have the capital, or do you have to consult the local communities and get something else in terms of permits?
Yeah, so the consultation part is an ongoing, always part of your exploration in British Columbia. You have to be on top of that. In terms of permits, you can do IP without an exploration notice of work permit in hand, but we can't physically make disturbance or drill holes without that permit. So our next step would be to go and do a no impact geophysical survey. You don't even have to connect your geophysical survey components with wires anymore. It can all be done wirelessly. There's lots of ways of doing it low cost. You're not even cutting lines in the bush. That we can do with what we have in hand, without having to have special permits. Once we go to drill, we sort of need to know where we're going to drill, what the area is going to be in focus, and then we have to apply for permits. And that permit application process requires some pretty good First Nation consultation alongside of it, involvement, and time. So we want to kind of get this survey under our belt, figure out if we have the targets that meet our threshold that we're excited about, and then get them permitted so that we're ready to go. We're able to drill this thing when the markets allow.
How many different First Nations are you dealing with?
In this area, 2.
Okay. But they're all,
people that I'm familiar with, so it sort of helps on that side.
and they're also well familiar with the concept of exploration. I think that's been going on there for many generations. So
yes and no. Some groups are very informed. There's a lot of turnover in the management and the chiefs of some of these groups, and so sometimes yes, and sometimes there's a re-education or a rediscussion, I should say, not necessarily education, but some of them need to get up to speed as to what you're doing. A lot of people assume that you're mining and digging up and making huge holes in the ground.
Yeah.
And for the most part, we're following logging, forestry, and we're just utilizing their infrastructure. And the Luis project has a network of logging roads, so very easy access, very low cost, and we can probably work there year round, which is fantastic from an exploration side.
Interesting. I think geos will definitely enjoy working there in the winter, based on stories that I've heard. But
yeah,
you can you can see about that later on. Now, yeah, it's definitely an interesting target, a new project that you're getting involved with, sort of on the lower end of the cost curve, if you will. It's the one that really got me to pay attention to the company. So I hope the financing part of it all works out as well, and hopefully get you back on sometime to revisit what's happening here. But let's for a moment go down to Arizona and talk about what you have going on there. Is Gold Range now becoming sort of a secondary property to what you have in BC, or do you still want to hold on to it, or how do you see its future?
Yeah, for sure. I mean, we see a ton of value there. I would still put it as our core asset. When we started there a few years ago, we had 3 claims. Now we have 361. We've defined a 4-kilometer long gold trend, and we're putting together what I think could be the biggest of the zones, at the far west end of it, at our West Gold target. So I see that as a core asset. The issue is the market isn't that excited at the moment. So over the last 6 months, we've sort of consolidated the asset. And what I mean by that is we had an option with a core group of claim holders there, a dozen or so claims. This group had held it for a couple of generations. There's mining activity that went on their claims. There's a crusher, there's a ball mill, there's warehouses, a house. There's actually facilities on private ground, patented land. So these guys were sort of hand-to-mouth mining at times, producing gold, but no one had ever consolidated this ground. No one had taken what they had, put the whole belt together, and looked at it as a whole. Everybody in the past was looking at this in terms of high-grade narrow vein mineralization, and there's a lot of that. There's hundreds of high-grade veins spread over tens of kilometers through this belt, but there's some bigger structural trends where there's good bulk tonnage potential around these high-grade veins. So we've come in and focused not just on the high grade, but on the 20, 50 meter wide halos of bulk tonnage stuff that comes to surface that would be heap leachable. That makes a ton of sense. And we've had some really good success in putting those zones together. And we're able to consolidate those claims. And in doing that, these former owners of the claims, they now own about 9.9% of the company. We paid them 120 US cash as part of the deal, and now they're fully bought in, involved in the company, and their interests are aligned with ours. They want to see the company succeed. But in doing that deal, we sort of eliminated about $3.5 million worth of payments and expenditures that we would have been forced to do over the next couple of years. So now we can breathe. Now we have time to look at this property, and we're in control of our spend and our costs. So very key for us to have our timelines back, and we can be a bit patient. We see a ton of value here. We're going to put together our best targets, and we're going to be a bit patient as opportunities arise. And as we start to see a tailwind, and at some point we're going to see a tailwind in the gold space. The whole industry is a little beat up at the moment, has been for a while, sort of up and down. But when things start to come back, it's these higher quality projects that we've got 138 holes into it. We've got zones defined. We're pre-resourced because we're still finding the edges of our zones and we're still finding opportunity. At some point, we would want to move this to a resource, understand how many ounces we have here and how many might fit into a reasonable sort of low cost heap leach type gold operation. There's not a ton of these projects out there. So at some point we think there'll be M&A in the majors. It'll come down into the mid cap, and eventually juniors will start seeing some love again in our space. And we want to be at the top of the list when we get there. And we're working to do that. But we're not going to rush. We don't need to blow out our capital structure at these prices. Now that we can control our spend, we'll be a bit selective, but we want to be ready as well. It's a great place to work, great jurisdiction. Arizona, if you're in the right location.
I blame the lack of love for the junior mining stocks on Nvidia. That kind of makes it easy for me to cope, because I say that whenever Nvidia goes up, then it's a lack of liquidity for juniors because all the money goes that way. And when Nvidia goes down, I blame it on the stock market going down and pulling the juniors with it. So it kind of seems that whatever happens with Nvidia, my stocks are going to go down. But what exactly do you plan on doing here in 2024 on the Arizona side of things?
Yeah, so we've been out there in March. We've done more field work. We've enlarged our key new target at Westgold. We are working on some specific things around that target, but we've recently re-permitted. We're ready to go there, basically. So it's when the market's there, when the timing is right, I think we want to go in there, and our targets aren't deep. We can go in there and drill a few dozen holes to fairly shallow depths, and the target, if it holds up, we can add real size potential quickly without a lot of cost. So it's an attractive sort of leverage on what we've already found, and I think a way to move it forward. Bigger picture there, maybe there's a story to consolidate the bigger district with other companies involved. To me, that's always been an exciting opportunity moving forward. And it's always on the discussion list, but it's not there at the moment. But you've almost then got a district that's already above the threshold for potential mid-cap or smaller company development. So exciting upside.
Do you think you can use that, what you're telling me here, as part of the financing for the BC project? And would you, like, if someone came along tomorrow and gave you some kind of an offer, would you consider that offer so that you can go and focus 100% on BC, or is that not how you want to play this?
No, I think we got to advance both assets, and we have to treat each accordingly. Different investors might have different outlooks. People might be copper focused and they want to see money going into copper. People might be heap leach gold focused and want to see money going in. We talk to investors that have a lot of different opportunities. Ideally, we advance things at the same time, but the key for us near term would be try to get both drill ready so that we can really capitalize. It's drill results that drive value in our business. And that's sort of where we want to be positioned. When things start to turn, we want to be at the front of the pack, and we want to be able to get out there and drill some holes that could make a difference for our investors.
I'm thinking about it mostly from a risk reward perspective, I suppose, and why I'm bringing that up specifically with Arizona is because I'm thinking, is this more complicated geology basically than say your typical copper porphyry in BC, given that the district has undergone, as far as I understand it, laterite and tertiary age compression and extension. And again, as a geologist, this could have been written in Chinese. I would have understood just as much about it as a non-geologist, I mean. But so does that make it more complicated, or are those more complicated rocks?
Yeah, so I mean, we're going to see structure in both those deposits. But the key difference that might allude to your question here is that gold range. Our first hole into the Westgold target that hit was 35 meters at 0.7 grams, and there's 7.5 meters at 2.5 grams in there. So we're talking about 20 to 50 meter intercepts of gold mineralization that will come out of the Gold Range project unless we discover something new that has bigger size potential. So that's sort of the level. And we can build real ounces at those widths. But on the BC project side, we're going to be targeting 4, 5, 6, 800 meter intercepts of mineralization. So when you talk about that risk reward and what might make an impact, a big hole into a porphyry will probably make a bigger splash than a 35 meter hole at a gram into a sort of a bulk tonnage gold target of the style that we're at in Arizona. So yes, I think that big discovery will probably change things overnight. It'll take a while for the market to catch up, even to positive results at Gold Range. Doesn't mean Gold Range still isn't a quality target because it's closer to having a resource base that would make sense for a company our size.
When I talk about risk reward, I'm also talking and thinking about your specific understanding of both projects. And as far as I understand it, so why I brought the timeline of the project is because as far as I understand it, it's these granitic intrusions that you have to thank for mineralization on this project. And I'm thinking, how well do you really understand these, and how well understood are they in the region as a whole?
So the porphyry models in the region are very well understood. We know where it sits. We know, I mean, in BC, we're talking about bulkily age intrusions. They're roughly 80 million years old. Some of them have mineralization in the intrusive. Some of it's mostly in the wall rock around the intrusive. We understand that. We understand the model. We know what the alteration looks like when you're close or far. So the models are good. The unknown is the structural complexity. Almost all the systems that we see in the area, with a few exceptions, have been chopped up to some degree. So it's not always as easy as seeing a rock and knowing where you are and which way to go. There's more to it. In Arizona, we've got smaller targets, but we know and we can map and we can see them. There's very low risk in us drilling a hole there and hitting or missing mineralization. I'm pretty confident if we drill 12 holes, 10 will hit. 10 will hit. So that part of the risk we've really mitigated through, 4 years of intense geologic understanding and trial and error on the Arizona property. That's going to be pretty high success rate with a drill, likely. That's a forward-looking statement from somebody who's optimistic, an exploration geologist. Right? But I think we understand the target there. We've defined it around the zone that we're going to drill testing, and now it's just a matter of proving it with the drill. Over in BC, we're trying to image stuff with geophysics. We don't know what's below that lower fault. We don't really know where anything is. We're going to try to put that together through indirect evidence, geophysical expressions. So yeah, there's going to be some trial and error, definitely, with the BC stuff, but a bigger prize. And the risk-reward ratio, I think, is pretty exciting. A geophysical survey might tell us if we've got real targets, and then 5 or 6 drill holes will probably tell you if you're in the right area and maybe even make a discovery. So that's sort of the upside. Nature will throw a wrench at you for sure, but that kind of discovery gets me excited, and I think that can be sort of game changing for the company. So from that point of view, it's an attractive risk reward scenario, given that it's copper gold focused and we're seeing this increase with depth already. You might get into something good down there with a bit of luck on your side.
I'm starting to better understand your corporate approach to things, your corporate strategy. I did have a couple of more things that I noted regarding your Arizona properties. First of all, it seems that the mineralized veins are described as mesothermal veins. Do you think that the characteristics of those veins are going to impact how far or how deep they go and how deep you're going to have to chase them? And is that also related to the fact that they pinch and swell as they typically do?
Yeah, exactly. So the mesothermal style of gold mineralization, I mean, there's an overlap with what people call orogenic. There's a whole range there, but these things as a whole, they're quite persistent. So they can pinch and swell, start and stop, but the zones can be very laterally and vertically extensive. They can go very deep. In our case, we're looking more for the halos around it. So in terms of depth, we're going to be limited by what you can fit into an open pit. One of the advantages we have is that some of our structures on the west side especially are hosted in flat dipping faults. So there's a series of these flat dipping faults that host, some of them are stacked, some of them are single, as far as we know. That host mineralization. They have a high grade core in the very middle, can be 1/2 ounce type material, 10-gram material. And then they have that 1/2 gram to 2 gram halo around it. And if they're flat dipping, and in one scenario, they occur around the edge of a hill, the whole target is close to surface, would fit into a very attractive open pit type scenario and makes sense. If your zone is steeply dipping, you're only going to get a little bit of it into a real open pit before your strip ratios get unrealistic. So that flat dipping nature on the west side is, I think, really going to help us potentially build ounces if the exploration model holds up and the target is where we think it is.
How are you going to prioritize once the time for drilling comes and once you have the money between the different zones? I think you're working with 4 main zones right now. How are you going to prioritize where you go first to get the most impact for the share price?
Yeah, so we always want to fundamentally add value to the project and the property. We have our Excelsior zone on the east side, pretty much fully defined. At least it's open at depth, but we're not going to get an open pit much deeper than we've already sort of drilled. As we move to the west, we have some open targets with some scale in there that we want to test. But our wide open potential right now is on the West Gold target on the far west side of the property. We think that has some really serious size potential. We would prioritize our first drilling to prove that and show that potential, open up that potential. Once we eventually drill out West Gold, if it's there, we probably at a stage where you'd want to start putting a resource together for the property and really letting the market know how much we found. Because right now that's sort of an unknown.
Is West Gold different though? I mean, lithologically or in terms of setting or something else?
We see a little bit more intrusive activity as we get over to West Gold, but it's very much a flat dipping structure. And the neat thing at West Gold is it wraps around the top of a hill and you can see it exposed in a few areas. And some of these areas have small scale, high grade underground mining along it, but no one's ever looked in the middle where you don't see that expression because it's under 10 meters of rock cover. So we've got an excellent opportunity there to show what we already think we know from geologic mapping with the drill and put that together and get something that has, 400 meter by 400 meter scale, maybe 20 to 50 meters wide. And all of a sudden you have tonnage potential that could make a difference. In an open pit type constraint, that could make a difference. All those things kind of line up.
It does seem a bit higher grade though. Is that related to the fact that it's potentially like closer to the intrusion, or like why is it higher grade?
Potentially, we're looking for those types of district scale zoning patterns in mineralization, in elements, in alteration minerals to try to get a better handle on that. When it comes to grade, we've got the most holes in Excelsior, and it shows us that 1 to 2 gram core. So as far as we know right now, based on the limited data we have on the other parts of the system, that 1 to 2 gram core at Excelsior is pretty important. And then the rest is just a gradational halo. It goes to 0 as you go further out. So wherever you pick your cutoff is going to dictate what your final grade is. So it goes to like a gram, 1/2 gram, down to 0.1 gram as you go out. And all the zones seem to do that, right? They're gradational outwards. So if we can strain that a bit more, we're going to have some nice grades in terms of a heap leach type scenario. But as we go over to West Gold, we see more of it exposed. So we have some of that high grade vein sampled, and we get some beautiful gold specimens, visible gold through the rock, and some nice high grades, of course. We pretty much know the really high grade stuff because you can see gold laced through the quartz vein already. The question is what is the halo? How does it hold up? You don't want to spread that high grade around unmineralized rock. So when you sample it, you want to make sure you have a cutoff. And if you're saying you got a 35 meter interval, you don't want to have 35 grams spread over 35 meters. You want to have a cutoff, a 0.1, 0.2 gram cutoff, and then calculate the mineralization within that, right? That's how our industry works. That would be industry normal practices. But you get a nice boost with with multiple high-grade veins within that interval, and then sort of a background 0.5 gram, 1 gram material around it.
I think you have it wrong, Shane. I think you're supposed to hit 100 grams over a 0.5 meter and then take out the hole that's been 200 meters and average that out. I think that's how it's supposed to work.
Yeah, no, I know that's, if you go through some of the press releases, you can definitely find that kind of stuff. But
Jokes aside, though, it seems like you can talk to me about the rocks for hours, and that's something I would appreciate. And maybe we should do that in the future. Maybe plan an interview or something once you're restarting drilling or more actively going to be exploring there. But I think I've been through most of the basic questions here, and it was very important for me to understand sort of the corporate strategy here behind you doing this. So I am going to cut it here. What am I forgetting, though, to ask you? Anything else that you want to add here at the end?
no, fantastic. I really appreciate this opportunity, and it's great that you've had a discussion with Michael Gentile. He's a fantastic supporter. He's a very informed, knowledgeable, experienced investor, and we love to have people like that in the story because they understand the markets. They understand, the things that we're going through now, and they offer great advice and great insight, and very much appreciated how this all came together.
Well, thank you so much, Shane. Thank you for investing your time with me today.
You bet. Thanks so much.